Hello everyone, how are you all? I hope everything going great and amazing. If you are appearing for May 2026 or November 2026 onwards examinations and you are thinking to wrap up entire GST, you want to just revise everything, then this is the video for you. Without looking at the book, by Scribble technique, I am going to make you recall entire CGST Act, entire IGST Act applicable for your syllabus. I am not going to teach you anything. I'm not going to make you understand anything. We are just going to recall. So this video, if you are seeing at least 2-3 times prior to exam, you are listening it on 2x speed. Even today is your exam morning, you wake up, you listen to this video or audio, and your full GST will be done. I hope you are ready for this. A super exciting ride, very fast it is going to be. So let us start with CGST Act 2017. CGST Act 2017, S for 7, S for supply, Section 7, scope of supply. 7.1 says supply includes, 7.2 says supply excludes. 7.3 says government has power to notify certain transactions as goods not service, service not goods, and section 7.1a talks about you check schedule 2 and see as per schedule 2 what is goods and what is services. Talking about 7.1 supply includes. Now supply can be with consideration, without consideration. Now, generally, no consideration, no supply. As per Schedule 1, there are only 4 activities in GST which are considered as supply even without consideration. First is permanent transfer or disposal of business asset on which ITC has been taken. Second, supply between related person, distinct person in course furtherance of business. But there is one exception here. If employer is giving gifts up to 50,000 per annum to an employee, that is okay. More than 50,000, entire amount will be considered as supply. Then third is principal giving goods to agent, agent giving goods to principal. And last is if you are importing services without consideration, it has to be from related person or own establishment, plus it has to be in course furtherance of business. Why only import of services is covered here? Because import of goods is specifically dealt with in Customs Act. Who are the related person under GST? SOFA corps are the related person under GST. So for sole agent, sole distributor, for family. Now, spouse and children are always going to be your related person, but parents, grandparents, brother, and sister, only if they are dependent, then they are going to be related with you. C for control, O for officer director, partner, employer, employee, and shares greater than equal to 25%. The triangle concept is covered here, meaning if A is holding 30% in B, they are related. A is holding 70% in C, they are related. However, B and C are also going to be related because a common person is holding in both of them. Ma'am, what do you mean by distinct person? Same PAN, separate registration. If under my own PAN only I have a separate registration, might be in same state voluntarily, might be in different state, but if it is same PAN, separate registration, we are going to consider it as distinct person. Ma'am, who is agent as per GST? A person issuing invoices in own name when dealing with third person will be known as agent under GST. So only these 4 activities: permanent transfer, business asset, ITC availed, supply between related distinct person, principal to agent, agent to principal, only goods not services, and import of services from related person own establishment plus in course furtherance of business will be considered as supply without consideration. Otherwise, always for a transaction to qualify as supply, consideration has to be there. So section 7.1a says all forms of supply, sale, transfer, barter, exchange, license, rental, lease, disposal, all forms of supply made, agreed to be made by a person in course furtherance of business will be considered as supply. Then 7.1b says if you are importing services for consideration, then whether it is business purpose, whether it is personal purpose, doesn't matter. Import of services for consideration will always be considered as supply under GST. And 71SS says a person other than individual, let us say club, association, firms, doing transactions with their own members or constituents for some kind of a cash deferred payment valuable consideration, this will also qualify as supply under GST. 7.1 says supply includes, 7.2 says supply excludes, 7.2a and 7.2b. 7.2b says Article 243 GW plus state government granting liquor licenses, neither supply of goods nor supply of services. Talking about 7.2a, it is Schedule 3 negative list. FB changes. Schedule 3 negative list, FB changes, services of funeral, mortuary, burial, crematorium, including transportation of deceased. B for bond to bond transfer. C for court tribunal, it also includes consumer dispute redressal commission. Then C for co-insurance and ceding commission. So for co-insurance, if on the original gross premium full GST is paid, then whenever you are just allocating it to your co-insurer, it will not be a supply, no GST. Ceding commission, if I am paying reinsurance premium, on that premium I have to collect GST, pay to government, so premiums are fully taxable. But when the reinsurer gives this ceding commission or deducts ceding commission from this premium, then on this reinsurance commission or ceding commission, GST will not be charged. So if A is paying 100 rupees premium to company B, on this GST will be charged. Now B is paying 70 rupees premium to company C for reinsurance, on this also GST will be charged. But when C will be giving, let us say 5 rupees or so as ceding commission, on this commission GST will not be applicable. So C for co-insurance, ceding commission and court tribunal, including consumer dispute redressal commission. H for high sea sale, when the goods have left the port of origin but they are not yet cleared in India. A for actionable claim other than specified actionable claim. So lottery, betting, gambling, online money gaming, horse racing and casino. These 6 specified actionable claims are supply. Other than these, all other actionable claims are not supply. One non-taxable territory to another non-taxable territory without goods entering into India. G for government, E for employer, employee, S for sale of completed land and building and supply from special economic zone warehouses or free trade warehousing zone. When you have neither cleared them for domestic consumption nor you are exporting, in the free trade warehousing zone or in the special economic zone only, there if you are selling to someone, it will not be considered as supply under GST. Talking about 7.1a Schedule 2, it simply explains what is goods, what is service. So if you are permanently transferring something, giving entire ownership, that will be considered as supply of goods. But just giving rights to usage, temporary rights or all these things will be known as services. Softwares are services, restaurant, works contract service, to do something, to not do something, to tolerate something for which you are getting consideration, there's a contract, that is also supply of service under GST. Talking about land and buildings, before completion certificate or first occupation, whichever is earlier, it is a construction service. But after completion certificate, first occupation, whichever is earlier, it falls in Schedule 3 negative list and therefore no GST is going to be charged. Right, ma'am. S for 7, S for supply, section 7, scope of supply. Then 2 zeros getting mixed become 8. Section 8A, composite supply, and section 8B, mixed supply. 2 zeros getting mixed, you remember mixed supply. So 8A, composite supply, 8B, mixed supply. Composite supplies are naturally bundled in ordinary course of business, so they are taxable at the principal rate of tax. However, mixed supplies are supplied for single price and they are not naturally bundled, so they are taxable at the supply attracting highest rate of GST. One printing clarification is important here. So if I am giving content and my printer is giving me paper also, giving me printing service also, so that's a composite supply. First of all, it is very natural. If I give PDF to my printer will print the PDF on a paper and give it back to me. Paper is goods but printing is service. What should I consider it? First of all, it is naturally bundled, so it will be taxable at principal rate of tax only. Now we say in printing, if the content is important, let us say I am getting annual reports printed, books printed, in which the quality of paper is not important but content is important. In that case, we will say you consider it as printing service and make everything taxable at the rate of service. However, if paper quality is important, let us say I get a logo printed on tissue paper envelopes. In that case, the quality of tissue papers or envelopes will be more important compared to what the content is printed on it. In that case, you consider it as supply of goods. Then we have preferential location charges. Whatever treatment is done with the original property, that same treatment will be done as preferential location charges also. If property is taxable, preferential location charge is taxable. Property is after CCFO, whichever is earlier, it is not taxable. Even the preferential location charges are not going to be taxable. That is also a composite supply. Right. Then talking about section 9, which is charging section, levy and collection. Section 9, charging section, levy and collection. 9.1 talks about normal levy. So normal levy simply says on all goods and services, GST will apply. If it is intrastate, C plus SGST. If it is interstate, IGST. The taxable person will collect GST and pay to government in the prescribed manner. Except GST is not applicable on alcoholic liquor for human consumption, plus the undenatured extra neutral spirits which are used to manufacture alcoholic liquor for human consumption. On these things, excise and VAT only continue, GST is not applicable. On what value should I apply GST? Value we will teach you under section 15. Whatever is the transaction value as per CGST Act section 15, that you have to take. Rate whatever government will notify on council's recommendation. As of now, maximum they have notified 40% under IGST, and C plus S 20% maximum is the rate as of now. Then 9.2 talks about you go and take a nap. To these 5 products, we are saying, you go and take a nap. GST not applicable today, will be applicable from a future date whenever government notifies. What is these 5 things? High speed diesel, motor spirit, natural gas, aviation turbine fuel, and petroleum crude. GST not applicable today, is going to be applicable from a future date. Then talking about 9.3, which is reverse charge mechanism. We have reverse charge mechanism on goods. We have reverse charge mechanism on services. Talking about reverse charge mechanism on goods, it is 1, 2, 3, 4, get on the dance floor. 1, 2, 3, 4, get on the dance floor. One says, one registered person supplying priority sector lending certificate to another registered person. 2 is unregistered person supplying metal scrap, essential oil. 2 things. Metal scrap, essential oil supplied by unregistered person to registered person. RCM is going to apply. 3 tigda kam bigda. 3 are 3 weird things. Now who is weird in India, ma'am? Government first of all. So let us say government is supplying seized goods vehicles to registered person. Government is supplying lottery tickets to the agents or distributors of lottery. And last is person making raw silk yarn supplying it to a registered person. RCM is going to apply. And fourth is agriculturist supplying to registered person. Raw cotton, tendu leaves, tobacco leaves, and cashew nuts. Raw cotton, tendu leaves, tobacco leaves, and cashew nuts. We're going to see this in section 23, that agriculturist is a person engaged in agriculture doing cultivation out of own land, can be an individual or an HUF. So if this agriculturist is supplying to a registered person, raw cotton, tendu leaves, tobacco leaves, cashew nuts, then RCM is going to apply. Right. For metal scrap and essential oil, compulsory. Supplier has to be unregistered, recipient has to be registered. Only then RCM will apply. Ma'am, what if supplier is registered here? Then normal forward charge mechanism will apply. But here they have not put any condition. Only recipient has to be registered. For raw silk yarn, only recipient has to be registered. Supplier might be registered, might be unregistered, doesn't matter. Always RCM will apply if he is making raw silk yarn and supplying it to a registered person. So very specifically, you have to remember who is supplier, what is the goods, and who is the recipient. All 3 conditions satisfied, then you are going to apply RCM. So one is a registered person supplying priority sector lending certificate to another registered person. 2, unregistered to registered metal scrap, essential oil. 3 things, government seized goods vehicles to registered person, government lottery tickets to agents, distributors, and raw silk yarn to registered person. And four is agriculturist, two registered person, raw cotton, tendu leaves, tobacco leaves, and cashew nuts. Then talking about services which are taxable under reverse charge mechanism. So first of all, GTA services, goods transport agency. So if your goods are transported via road by a GTA, ma'am, what if supplier is not a GTA? Supplier is an individual truck owner, horse cart, bullock cart, lorry owner. All these cases, it is going to be exempt under GST. Only when supplier is goods transport agency for freight, tax is going to apply. Then you need to check who is the recipient. If recipient is anyone out of CF scrub, what is CF scrub? Cooperative society, factory, society, casual taxable person, any registered person, unregistered, registered partnership firm, or body corporate. What do you mean by body corporate? Any company, private limited company having its own separate legal identity is known as body corporate in GST. So any limited or private limited company or corporation basically will be a body corporate. So if you are a cooperative society, factory, registered in your respective cooperative societies acts, factories act, you might be unregistered in GST. That's not a problem. We will tell you to take compulsory registration and then discharge RCM liability. So you can be unregistered in GST but still be a specified person. That is okay. You should be a registered factory, cooperative society, casual taxable person, registered, unregistered partnership firms, any registered person in GST. So all individuals, HUFs, all the registered person are covered in this point only. Others can be registered also, can be unregistered also. If a factory is registered in Factories Act, not registered in GST, it is okay. It will still be a specified person here as per the goods transport agency point. Just a second. Yes. Done. So if the supplier is a goods transport agency and recipient is CF scrub, in that case, tax is going to come for sure. If supplier is, let's say, not a GTA, then GST will be exempt. Let's say recipient is not the CF scrub, recipient is an unregistered individual taking transportation services, or those three TDS specified people taking transportation services, that will all be exempt under GST. Only when supplier is GTA doing transportation by road and recipient is anyone out of CF scrub, tax is going to apply. Now, if this GTA is registered opting for forward charge mechanism tax at the rate of 18%, then he will collect pay. He also has an option of 5% here, but in that case, ITC will be restricted. So if he is registered taking forward charge mechanism option, he will collect under forward charge and pay to government. But if the recipient is CF scrub, but supplier is unregistered, not opting for forward charge mechanism option, then these people are going to pay tax under reverse charge mechanism on goods transport agency. Very simple. So if supplier is GTA and recipient is CF scrub, tax will apply. Other all cases, GST will be exempt for freight. Now, if tax is applying, you simply need to check. If supplier is in a position to collect and pay under forward charge, then forward charge. Otherwise, reverse charge mechanism. Right, ma'am. Talking about legal services. See, if there's a chartered accountant, cost accountant, company secretary, tax consultant, etc., giving legal services, in all those cases, it is going to be normal forward charge mechanism only. But if advocate or a firm of advocate are giving legal services, then you have to check to whom they are giving. If they are giving to another advocate, firm of advocate, central government, state government, union territory, local authority, government agency, government establishment, or a person other than business entity, all these situations, tax is going to be exempt under GST. But a business entity whose preceding financial year turnover is greater than registration limit, in this case, RCM is going to apply. If previous financial year turnover was less than registration, then also it is going to be exempt under GST. So business entity means anyone doing business, could be individual, HUF, LLP, AOP, BOI, company, cooperative society, factory. Anyone who is doing business is a business entity. So anyone whose preceding financial year turnover is greater than registration threshold limit, in that case, RCM will apply for legal services. Other all cases, legal services by advocates are exempt. Legal services by chartered accountant, cost accountant, company secretary, everything is taxable under forward charge mechanism. Same for arbitral tribunal. If arbitral tribunal is giving services to CG, SG, UT, LA, GA, GE person other than business entity, it is going to be exempt. But business entity whose preceding financial year turnover was greater than threshold limit, then RCM is going to apply. Whether you have actually taken registration or not is not important. Whether you were liable for registration last year, based on that you are going to take decision. Even if you have not taken registration, as per section 24, they will tell you to first compulsory take registration and then discharge RCM liability as a recipient. So that is not a problem. You just have to check your preceding financial year turnover. Right. Talking about sponsorship services. So if the person who is supplying the sponsorship services, it can be anyone, right? So the supplier of sponsorship service, meaning the person getting the money of sponsorship, supplier can be any person, any person, just not a body corporate. And recipient should be a body corporate or a partnership firm. So the person giving the money of sponsorship, the recipient of sponsorship services, should be body corporate or partnership firm. Supplier can be anyone other than body corporate. If this is satisfied, then RCM is going to apply. Let us say supplier is a body corporate, then forward charge mechanism. Recipient is an individual, then also forward charge mechanism. So if this condition is not satisfied, then forward charge mechanism is going to apply. But if supplier is not a body corporate and recipient is a body corporate or partnership firm, in that case we say reverse charge mechanism is going to apply. Then supplier can be any person giving transferable development right, floor space index, additional floor space index, long-term lease greater than equal to 30 years land, giving to promoter builder. In this case, the promoter is going to pay tax under reverse charge mechanism. If a director is giving any services to a company or a body corporate for which you are charging any professional nature payment, sitting fees, then also reverse charge mechanism is going to apply. Ma'am, what if director is charging salary as a whole-time director? Salary is Schedule 3 negative list, no GST. But professional nature payment, let's say your TDS is deducted under section 194J. In that case, we say reverse charge mechanism is going to apply. I am a director in this company, but I also have a furniture business. I sell furniture to this company and get money, then normal forward charge. So outside you being a director, in your personal capacity, if anything you are doing, that will be treated normally only. As a director, if you are getting any professional payments, then reverse charge mechanism is going to apply. Right, ma'am. Then talking about insurance agent to insurance company, recovery agent to bank, NBFCs, financial institutions, individual direct selling agent to bank, NBFCs, financial institutions, members of overseeing committee to Reserve Bank of India. All these situations, reverse charge mechanism is going to apply. Recovery agent can be individual also, firm also, anyone giving services to bank also, RCM will apply. But direct selling agent compulsorily has to be an individual only. If direct selling agent is a partnership firm or a body corporate, then forward charge mechanism will apply. Only for individual direct selling agent giving services to bank, NBFC, we will say RCM is going to apply. Then government giving services to business entity other than Ministry of Railways, Department of Post, aircraft vessel inside outside port airport, transportation of goods, passengers and immovable property. MAY26 services will be treated separately as we study in exemption chapter. Other than MAY26 services, if government is giving any services to business entity, reverse charge mechanism is going to apply. Specifically talking about renting of immovable property by government. So if government is giving immovable property on rent, government is giving immovable property on rent to a registered person, RCM will apply. To an unregistered person, forward charge mechanism will apply. But in both cases, if the rent is up to 5,000 rupees per annum, then it is going to be exempt under GST. More than 5,000 rupees per annum, fully taxable, it will be registered RCM, unregistered forward charge mechanism. Forget government renting. What if you or I, normal people, do renting then? Then if residential renting is done for residential purposes, residential renting done for residential purposes, supplier can be anyone. Supplier can be any person. Recipient, if is unregistered, GST is going to be exempt. But if recipient is registered, you need to check if that registered person has taken the home on rent to stay with family personal purposes, then this is also going to be exempt. but the purpose is residential, somewhere related to business. For example, you are taking house on rent for your staff to stay. Staff is going to stay only. So purpose is still residential, but it will go in your staff welfare expense in business P&L. Company is taking home on rent for director. It will go in company's P&L. So these cases we will say the registered recipient taking house on rent but related to business P&L, reverse charge mechanism is going to apply. Rest all cases, it is going to be exempt under GST. Talking about other than residential renting, commercial renting, maybe house given to a doctor to run the clinic. Even though it is residential, the purpose is commercial. Or maybe house given to a salon owner to run a salon there. Again, the purpose is commercial. Or maybe a shop only given on rent for commercial purposes. Everything, commercial purposes will come here. Now, for commercial purposes, if the supplier is a registered person, you have to apply forward charge mechanism. Normally, for all supplies, if supplier is a registered person, will collect under forward charge and pay to government. But if supplier is unregistered, a recipient is unregistered or a composition taxable person, then GST will not apply. But an unregistered person giving commercial properties on rent to a registered person other than composition, here we are going to say reverse charge mechanism is going to apply. So residential renting other than one case is normally exempt only, but commercial renting generally it is going to be taxable. Where possible, forward charge, not possible, reverse charge. But if both are unregistered or recipient is a composition person, then we will say GST is not going to apply. Artists, lyricists, songwriters, singers, etc., giving rights of their original works to composers, music companies, etc., RCM will apply. Even author giving rights to publisher for the literary works, RCM is going to apply. But for author, they do have an option that if author wants, they can select for forward charge mechanism, collect GST and pay to government. They will have to give a declaration on the invoice. By default, it is RCM only, but if they want, they have this option to go for forward charge. Other artists don't have this option. Compulsory reverse charge will only apply. Then business facilitator, a BF, will never take liability, but a business correspondent, BC, Bechara, will always take liability. Meaning business facilitator giving services to bank. It is supplier, bank is recipient. Never take liability, so tell the bank to collect and pay under reverse charge mechanism. But when agent of business facilitator will give services, being recipient will tell supplier to collect and pay under forward charge mechanism. So a business facilitator will never take liability, but a business correspondent is always going to take liability. So when correspondent will be supplying to bank, being a supplier will collect under forward charge. When taking services from agent, being a recipient will pay under reverse charge. So it is exactly opposite. You just have to remember that a BF is never going to take liability, business facilitator never will take liability, and exactly opposite is the case of business correspondent. Right, ma'am. Then we say renting of motor vehicle designed to carry passengers, including cost of fuel. Supplier should not be a body corporate. Recipient should be a body corporate, and rate they should have selected 5%. If all conditions yes, RCM. If any condition no out of this, maybe supplier is a body corporate or recipient is not a body corporate, or they have selected 18% rate, anything not satisfying these three conditions, then forward charge. But if all the three conditions are satisfied, then reverse charge mechanism is going to apply. Talking about personal security services. Personal security services, again, supplier should not be a body corporate and recipient should be a registered person, not composition or those three TDS people, for them forward charge. But other than these, normal registered person, recipient should be, and supplier should not be a body corporate. Then for personal security services, we say reverse charge mechanism is going to apply. Security lending scheme where the lender is giving shares to the borrower has to pay compulsory IGST reverse charge mechanism here. Right. I believe we have as such covered all the RCM points. If there are some one or two small points missed out, it's okay. However, these are the major RCM services generally which are tested in examination. Right, ma'am. Then one additional, all these 16 services as it is are applicable for IGST Act also. Plus we have one extra IGST Act entry which says that if a person in non-taxable territory is supplying some services to a person in taxable territory, basically can I call it as import of services? Yes. other than online information database access retrieval services which are imported by non-taxable online recipients, Amazon Prime, Google Drive subscriptions and all, there we know forward charge applies. Other than these non-taxable online recipients, any normal import of service is if happening, the recipient has to pay tax under a reverse charge mechanism. Right. So 9(1) normal levy, 9(2) high speed diesel, motor spirit, natural gas, aviation turbine fuel, petroleum crude, 9(3) reverse charge mechanism. 9(4) says if an unregistered person is supplying specified goods services to specified registered person, then this specified registered person will also pay tax under reverse charge mechanism. As of now, only real estate sector has been notified here. So input services, at least 80% you have to take from registered person. From 80, whatever is the shortfall, otherwise on that 18% flat RCM you have to pay. Cement and capital goods, even if 1 rupee cement you are purchasing from capital goods, 1 rupee cement or 1 rupee capital goods you are purchasing from unregistered person, you have to pay tax under reverse charge mechanism. Earlier on cement it was 28%, but now the rate is 18, and on capital goods also, whatever as per the HSN code rate is there, meaning whatever capital goods you are purchasing, if you would have purchased from registered person, what tax you would have paid, that same tax you have to now pay under RCM. For other input services, forget original rate. Whatever is the shortfall from 80%, on that you pay flat 18% RCM. But cement and capital goods, we say whatever is the actual tax applicable, that same RCM you are going to pay here. And then talking about 9(5), which says a supplier to be hattere, a recipient to be hattere, low e-commerce operator, you come collect tax and pay to government. So low is local delivery, housekeeping. Person keeping is not covered here, meaning calling a carpenter, plumber, AC service person is covered here, but calling a makeup person, hairstylist, massage person is not covered here. So person keeping services are not covered, only housekeeping services are covered. So local delivery, housekeeping and accommodation. For these three services, if original supplier itself is liable for registration under GST, let this supplier only collect GST and pay to government. Normally under forward charge mechanism, nothing will happen. But if the supplier is not liable, then we tell the e-commerce operator under section 9(5) to collect tax and pay to government. We are not going to leave the taxes. Right, ma'am. So local delivery, housekeeping, accommodation. If original supplier is not liable, then under 9(5) Eco will be liable. But for transportation, Ola, Uber, restaurant, Swiggy, Zomato, we say whether supplier is registered, unregistered, doesn't matter. Always under section 9(5), e-commerce operator is going to be liable to collect tax and pay to government. However, there is one exception. If there is omnibus supplied by a company, or there's a specified premise where the room tariff last year was greater than 7,500 per room per day, or you only want to in acknowledgement declare yourself to be a specified premise, in that case we say 9(5) will not be applicable. The supplier itself will be collecting tax and paying to government. Otherwise, generally, other than omnibus supplied by company and restaurant services given by specified premises, we say all other cases always e-commerce operator will be liable. Now there is a linking of e-commerce operator transactions with section 52 TCS. We are going to see it later, but simply understand one transaction cannot be taxable under 9(5) also and under section 52 TCS also. It is always going to be either. So first of all, you check whatever goods or services are supplied through eco. Are they local delivery, housekeeping, accommodation, transportation and restaurant? If yes, then you first check whether 9(5) will be applicable or not. If 9(5) is applicable, then TCS will not apply. Nothing. Simply the e-commerce operator will collect tax and pay to government under 9(5). However, let us say I book a room in a hotel via OYO, but that hotel itself is registered under GST. So accommodation services, but supplier itself is liable for registration. Meaning I will say 9(5) will not come. The hotel itself will be collecting GST and paying to government, right? Now in this case, because 9(5) cannot be applied, I will say now section 52 TCS is going to apply. Or let us say I purchase a calculator from Amazon. Is purchasing calculator covered in 9(5)? No ma'am, it is only for 5 services. Then again on that also TCS will come. So first you always check for 9(5). For whatever transactions are falling in section 9(5), compulsory you apply 9(5) only. Local delivery, housekeeping, accommodation. If supplier not liable, then 9(5) will come. Transportation, restaurant, always 9(5) will come. Just one exception, omnibus company and more than 7,500 specified premise. Right. So if 9(5) is applying, you apply 9(5). If 9(5) is not applying, then in that case you will check. If section 52 TCS is applicable, you apply section 52 TCS. Right. So by default, if 9(5) is applicable, you apply that. Not possible, you check for TCS. Now it might be possible, ma'am, that I am paying the money directly at the hotel reception. Then as per section 52 TCS can also not apply, because TCS provision says the payment has to be routed through the e-commerce operator. Only then they can collect this 0.5% TCS. No. What if I book a room through OYO, but I tell them that I will be directly paying at the hotel premises? Now because hotel is registered, 9(5) cannot come. Because money is not flowing through e-commerce operator, even TCS will not come. No problem. It will be a normal FCM transaction. The hotel will collect GST, pay to government under forward charge. No 9(5), no TCS. That is also possible. So you have to step by step check. First 9(5) applicable, apply, matter close there only. No, then go to TCS. Applicable, okay, apply. No, then matter close there only. It becomes a normal transaction. You don't have to take load that, oh, if it is e-commerce operator, something has to apply. No, it is not like that. Step by step you check and it is very simple. Right, ma'am. Done. So S for 7, S for supply, section 7, scope of supply. 2 zeros getting mixed become 8, section 8, composite mix supply. 9 is the charging section, levy and collection. Then 10 bahane karke bharenge kam tax. We are going to make 10 different types of tantrums to pay less taxes. Section 10, composition levy. First of all, it is a voluntary optional scheme. If you want to opt for it, you opt. There is no compulsion that you have to take composition. No, it's not that case. Right. Under section 10(1), 10(2), if you are dealing in goods or particularly only one service, which is restaurant, then you can opt for composition scheme. But 10(2)(a) is generally for services. See, even if you are supplying goods here, that is not a problem. But nobody would naturally want to supply goods under 10(2)(a) because the rate of GST is high here. And we have less rate option available for goods restaurant. So even if you are supplying goods here, government has no problem because you are paying more taxes. But restaurant or goods ke liye, if you are opting composition scheme and you want to give other services, then there is a limit. Preceding financial year turnover 10% or 5 lakh rupees, whichever is higher. Maximum only this much services, extra services you can give in 10(1), 10(2). 10(2)(a), as many goods, as many services you want, you can give till the total turnover limit, right? Under 10(2)(a), the total turnover threshold is 50 lakh rupees. 10(1), 10(2), 75 lakh for, see, the special category states are no asthma in Uttarakhand and Jammu Kashmir. However, for composition, we strike out Assam, Himachal Pradesh and Jammu Kashmir. So for Assam, Himachal Pradesh, Jammu Kashmir and all other states, 1.5 crore is the turnover threshold. However, for Nagaland, Sikkim, Tripura, Manipur, Mizoram, Meghalaya, Arunachal Pradesh and Uttarakhand, 8 states, 75 lakh is the limit. For 10(2)(a), any state you are, 50 lakhs turnover. Till the threshold of 50 lakh, you are eligible to opt for composition scheme. So your total goods plus service if is up to 50 lakh, no problem. Here, only goods restaurant you can give. This much services are allowed. So combined your this much services plus your normal goods restaurant turnover till everything total is below this threshold. No problem, you can continue with composition scheme. If you are a manufacturer, you have to pay 1% of your total turnover. If you are a trader, you have to pay 1% of your taxable turnover. If you have opted composition scheme for restaurant, then 5%, and under 10(2)(a), 6% out of own pocket. Every quarter you have to pay to government. Every quarter you file a form called CMP 08, and this is not a return, this is just a payment form. Return only one you have to file entire year, GSTR 4. 30 June is the due date after the end of financial year. So only one return. But on a quarterly basis, you have to file a form, and no ITC you can take, no tax you can collect from customer. Whatever is your turnover, out of that, into 1%, 1%, 5 or 6% out of own pocket on a quarterly basis, you have to pay to government. And this is going to be 0.5 plus 0.5, 2.5 plus 2.5. Why? Because a composition person is not allowed to make interstate sale. You can do interstate purchase, but you don't get ITC, so that's not a problem. But interstate sale you cannot do. So compulsory or liability always for intrastate supplies is going to be C plus SGST only. If you are a casual taxable person, non-resident taxable person, you are not eligible to opt for composition scheme. Or if you are dealing in non-taxable items like alcoholic liquor for human consumption, high-speed diesel, motor spirit, natural gas, aviation turbine fuel, etc., you cannot opt for composition scheme. You are doing any interstate supply, whether it is goods, service, branch transfer, exempt supply, any kind of interstate supply, you cannot do as a composition person. You cannot supply through e-commerce operator services where TCS should be collected under section 52. No. If you want to supply through eco where TCS is generally collected, you have to be a normal person. Goods you can supply, your TCS will be collected. But again, even online through e-commerce operator, you will not supply interstate. Only intrastate goods, maybe Blinkit, Zepto, etc. You can supply such goods where your TCS will be collected. If you are a manufacturer of ice cream, pan masala, tobacco, aerated water, fly ash, bricks, blocks, silicious metals, earthen roofing tiles, then in that case also you cannot opt for composition scheme. As a trader, you can opt. As a manufacturer, you will be ineligible to opt for composition scheme. So these are all the people who cannot opt for composition scheme. If you are converting yourself from regular scheme to composition scheme, you can do it only from start of financial year 1st April. But composition to regular, any time in the year you can shift. Here you will have to reverse ITC, for which you get 60 days time, and here you will have to avail ITC, for which you are going to get 30 days time. Simple? Yes, ma'am. So S for 7, S for supply, section 7, scope of supply. 2 zeros getting mixed become 8, section 8, composite mixed supply. 9 is the charging section, levy and collection. 10 different types of tantrums to pay less taxes, section 10, composition levy. Then we have one balle balle. Why balle balle? Because we have got exemptions from GST. There is also a section 11A which simply says that as per old prevailing practices, there was no GST or less GST on some particular goods or services. But now GST is being applicable. Government has this power to waive that GST off as per common practices under section 11A. But using the power of section 11 CGST Act, corresponding section 6 in IGST Act, government can issue absolute exemptions, conditional exemptions, whole exemptions, part exemptions to specified suppliers, specified recipients, specified activities. Government can issue exemptions. We have charitable religious activities, agriculture services, education, healthcare. Then we have construction services, insurance, government services, other small points. There is a full list of exemptions. The revision video of exemptions is separately uploaded on YouTube, which you should consider seeing. But just amendment you keep in mind is with respect to insurance this time. So if you are issuing life insurances or health insurances to individuals plus their family, in this case we are saying all the health insurances and life insurances are now exempt under GST, but only if it is for individual or its family. If I am issuing life insurances, health insurances to group, maybe employer is taking life insurance for all the employees, a trade union is taking health insurance for all the members of this trade union, then it is not exempt under GST. Life insurances or health insurances issued to groups are not exempt. But if army, navy, those people taking, they have been given specific exemptions. Otherwise we are saying group health or life insurances are not exempt, but individual taking for himself, herself, or family any life insurance, health insurance, we are saying GST is going to be exempt. This specific amendment you have to keep in mind. Rest, there is no amendment. The revision video is already there, available on YouTube. There is an amendment in the definition of local fund, municipal fund, but that's of course not that relevant for examination. राइट मैम. देन टाइम क्या हो रहा है जिंदगी की, तो 12 बजी है. एट 12 o'clock द टाइम चेंजेस फ्रॉम AM to PM, PM to AM. So 12 is a very important time, right? So at 12 o'clock the time changes. So time of supply for goods, immediately we have section 13, time of supply for services, and section 14, which deals with the rate change provisions. So at 12 o'clock the time changes. Time of supply goods, 13 time of supply services, and 14 rate change. Okay. Talking about section 12 and 13, there are common things which we can finish up together. So section 12 for goods, 13 for services. Subsection 1 simply says liability to pay tax arises as soon as time of supply comes. So what's the relevance of time of supply? When time of supply comes, that month return you have to pay the liabilities, your liability to pay has arisen. Then subsection 2 talks about forward charge mechanism. Subsection 3 reverse charge mechanism. 4 was for vouchers, now omitted because vouchers are neither goods nor services, not taxable only. If they are redeemed, then the redeemed goods services are taxable. Voucher in themselves are not taxable. Then subsection 5 talks about residuary points, something not covered anywhere. For registered person, we will say due date of filing return, and for unregistered person, there is no even due date. So whenever this unregistered person is making the payment, that only has to be considered as the time of supply. And subsection 6 says if there is any interest, penalty, late fees associated with the original goods or services, then whenever you actually receive this interest, penalty, late fees, generally on inclusive basis only, this is considered as taxable when actually received. So subsection 1, liability to pay will arise. 4 omitted. 5 residuary, registered person due date, unregistered person actual date of payment, and 6 is interest penalty whenever you actually receive. So what we have to now discuss is forward charge and reverse charge. So talking about section 12.2. Forward charge mechanism for goods. Think as if you are the supplier, because the supplier will be concerned about collecting tax and paying to government under forward charge mechanism. So if you are a normal supplier of goods, 99.999% question comes from here only. Normal supplier of goods, then your time of supply will be invoice or last date to issue invoice, whichever is earlier. How to see last date to issue invoice? As per section 31. Meaning, ma'am, the payment date is completely irrelevant here. Yes. When is your invoice actually issued, or what was the last date to issue invoice? In case of movement before at the time of removal, there's no movement before at the time of delivery, continuous successive statement payment. So we know what is the last date to issue invoice as per section 31. Check that, compare it with the original invoice date, and whichever is earlier is your time of supply in case of normal supply of goods. But if you are a composition person, or if you are a specified actionable claim supplier, then we will say invoice, last date to issue invoice, or payment, whichever is earlier. Here payment is relevant. If I'm getting advance, time of supply will come early. Here payment is not relevant for normal people, but for composition and specified actionable claim, payment means book entry or bank credit, whichever is earlier. So when you are making entry in books for receiving money, or actually money is coming in a bank account, whichever is earlier, that will be taken as your payment date. Then compare it with the invoice date or last date to issue invoice date, and earliest of all will be considered as your time of supply. However, if your payment is less than equal to 1000 rupees, so basically you are getting advances, time of supply is coming early because of payment, but that advance money is only less than equal to 1000 rupees, you have an option to ignore it. Meaning, if you want to not now take time of supply, it's okay. Later when invoice or last date to issue invoice will come, you can take at that time also. But if the advance money received is more than 1000 rupees, then you don't have an option. If payment date comes early, you have to take payment date as your time of supply. Right, ma'am? So simply for normal supplier of goods, I will say invoice, last date to issue invoice, whichever is earlier. Not relevant at all, whatever is the payment date. But for composition or specified people, we will say specified actionable claims are lottery, betting, gambling, online money gaming, horse racing, and casino. So we say invoice, last date to issue invoice, or payment, whichever is earlier. Then talking about 12.3, reverse charge mechanism for goods. I will say the day on which I receive the goods, the day on which I make payment. Again, payment will be book bank, whichever is earlier, book entry, bank debit, whichever is earlier. Or whenever my supplier is issuing me invoice, I will say 31st day from there. Day following 30th day or 31st day, whatever you call it, is one and the same only. Whichever is earlier becomes your time of supply. How to calculate days anytime in GST? Let's say I tell you that from 15 February, you calculate 31st day. What will you do? How many total days are there in February? 28 minus 15. So I will say 13 days of Feb plus how many are short out of 31. So you do 31 minus 13. So it comes 18, I believe. Yes. So this will be Feb and March. 18 March becomes my 31st day. Anytime you want to calculate days in GST, it is very simple. Whatever date, let's say they tell you from 20 March, you have to calculate 100 days. Simple. How many total days are there in March? 31 minus start date 20. So 11 days of March plus I will do April, May, and whatever is short out of 100, I will just check here, and that becomes my date on which that time is ending. So calculating days is very, very simple. Even if they give you two dates, let's say they tell you from 15 Jan to 20 April, calculate how many days are there. Again, what is the start date? 15 Jan. How many total days are there in Jan? 31 minus 15 plus Feb plus March and plus 20 April. Whatever answer comes, that is the total number of days between these two dates. So it is very simple to calculate days in GST. Always how many total days are there in the month from where you are starting minus that date, and then you keep adding further. You will automatically arrive at your final answer. Okay, ma'am. So talking about RCM goods, the day on which you are receiving the goods, payment or invoice say 31st day, whichever is earlier is your time of supply. If nothing is available, let us say, then whenever you are doing purchase entry of these goods in the books, that becomes your last option to take time of supply if nothing is available. Talking about section 13.2, forward charge mechanism for services. Simple question you have to ask, whether invoice is issued on time or not. How do I get to know? As per section 31, whether invoice is issued on time or not. If invoice is issued in time, yes, then you are going to take invoice or payment, whichever is earlier. Invoice is not issued on time, then service or payment. Date of completion of service, not start of service. So if invoice is issued on time, invoice payment earlier. No, then service payment earlier. Right. Here also small advances up to rupees 1000 you have an option to ignore. Both the forward charge mechanisms you have 1000 rupees option. Both the reverse charge mechanism you have no option. Even if 10 rupee advance you are receiving, your time of supply will come. If nothing is available, then whenever your recipient is recording in the books, you have to go and ask, and that you will take as your time of supply. If at all, last option, nothing is available. Right. Talking about 13.3, services reverse charge mechanism. You don't physically receive the services, so the receive point will not come. But you can issue self-invoicing if taking from unregistered person. So self-invoicing date, or if supplier has issued invoice, then you can calculate 61st day from there, or payment. Whichever is earliest will be your time of supply. Self-invoice 61st day from invoice issued by supplier, or payment, whichever is earlier. Again, if nothing is available, then last option, whenever you are recording your expense entry in the books, that only becomes your time of supply. Even if I am importing services, import of services, normal reverse charge mechanism applies. So for that also you have to apply section 13.3 only to determine the time of supply. But specifically there is one exception. If you are importing services from your associate enterprise, if you import from any normal person, you apply section 13.3. But if you are importing from your associate enterprise meaning same, transfer pricing, income tax, whatever you study, that same meaning of associate enterprise is applicable here also. Then you don't take this 61st day and everything. Then simple, you will see as a supplier, when I am recording this import entry in my books, or the payment date, whichever is earlier, simply that I can take as my time of supply. Right, ma'am. So section 12 and 13 is done. Subsection 1, liability to pay. Subsection 2, forward charge. Subsection 3, reverse charge. Subsection 4, omitted. 5, residuary point, and 6 is any interest penalty whenever actually received. That becomes your time of supply. Then talking about section 14, which is the rate change section. Section 14 says there are three events: supply, invoice, and payment. If two out of these three things are happening before rate change, then you are going to apply old rate. If two out of three are happening after rate change, then you are going to apply new rate. Now, what will be the time of supply? You plot the timeline. Plot the rate change first, and then you plot supply. If supply is before, one more thing is before, maybe invoice is before, payment is before, then whatever is there with supply before, that only becomes your time of supply. Or maybe let us say only supply was after, payment was before, invoice was also after. So you are fixing supply, that is after, one more thing is also after, meaning this date of invoice will be your time of supply. See, I will tell you a very quick trick between you and me. In case of section 14 rate change, date of supply is never the time of supply. It will either be invoice or payment. So you fix supply, and whatever is matching with supply, that date will become time of supply. But what if, ma'am, only supply was before, invoice and payment both after, or maybe only supply was after, invoice and payment both before? Then you will take whichever is earlier of invoice or payment, whichever is earlier of invoice or payment. So you just remember this quick trick. In section 14, your supply date is never your time of supply. It is either invoice or payment. If you fix supply and something matches with supply, that something becomes time of supply. But only supply is separate, invoice, payment are together, then you take earlier of the two. Only in case of goods, if invoice is not issued on time, then your last date to issue invoice you have to take as time of supply. Otherwise, whenever section 14 applies, you forget all the other provisions. Simply draw the timeline, plot everything: two things before rate change, old rate; two things after rate change, new rate is going to apply. Right, ma'am. As for 7, as for supply, section 7, scope of supply. Two zeros getting mixed become 8, composite mix supply. 9 is the charging section, levy and collection. 10 different types of tantrums to pay less taxes, section 10, composition levy. 1 balle balle. Why balle balle? Because you have got exemption from GST. We also study section 11A here. At 12 o'clock the time changes, so time of supply for goods. Immediately 13 we have time of supply for services, and 14 is the rate change section. Right. Moving forward, let us now start with one whole and sole section 15, which covers all the provisions with respect to value of supply. Section 15, value of supply. So here, first of all, we say 15.1. What is the problem? Whatever is the transaction value, that only becomes your value of supply. So we say price actually paid payable. Price actually paid payable, recipient is unrelated, and money is the sole consideration. No barter, no exchange. Then whatever is this price paid payable, that is only your value of supply. Plus you do inclusions of section 15.2, and minus you do exclusions of section 15.3. Talking about inclusions, there are 5. First, other than GST or income tax, TCS, any other tax, if it is there, you have to add it in the value. Second, obligation of supplier fulfilled by recipient. Any incidental expense incurred by supplier recovered from recipient. Freight, commission, packaging charges also. Incurred as well as recovered you have to add. I have incurred but I don't recover from recipient, I will not add. Or maybe recipient is doing independently with third party, then also I will not add. I have incurred and I recover from recipient as a supplier, then it will be added. Any kind of interest, penalty, late fees associated with the original supply. And last point is non-government price linked subsidy. Non-government price linked. If it is a lump sum subsidy, don't add. Government subsidy, don't add. Non-government price linked subsidy will form part of your value of supply. Talking about exclusions, if it is before supply discount, at the time of supply discount shown in invoice, you can reduce it from the value. But if it is after supply discount, then there are 3 conditions. Discount should be prior agreed, discount should be linked to invoice, and recipient should have reversed proportionate ITC, being a registered person. All these conditions satisfy, you can reduce the discount from value. Otherwise, you will issue commercial credit notes, non-GST credit notes, but GST reduction will now not be allowed to you. Right. Then section 15.4 talks about valuation rules. Ma'am, what if money is not the sole consideration? What if recipient is related distinct person? What if I'm dealing with my agent or principal? In that case, what to do? So we start with Rule 27 first. Rule 27 says, what if money is not the sole consideration? Diya mila, give take. Meaning, whatever I have supplied, is any open market value of that available? Yes, then you take that only as value of supply. You always have to follow the chronology. You cannot directly jump to step number 2 if step number 1 is available. Compulsory step by step you will go and determine the value of supply. So whatever I am giving, whatever I am supplying, whatever goods services I'm giving, is the open market value of that available? Yes, you take that. No, it is not available. Then what you have received, some money maybe you have received, or plus if you have received any additional consideration, then whatever is the fair market value of that additional consideration you take. Even this is not available, then whatever I have given, is there any like kind quality of that product available? Then what is the value you take that? Even that is not available, then whatever money I have received plus whatever additional consideration I have received, I will take monetary value of the same. Now, how to calculate monetary value of anything in GST? You apply Rule 30, which simply says you have to take cost into 110 percentage. Basically, you add a 10% markup on the cost and that amount you take as the monetary value. Even if this is not available, then last option is to, as per best judgment, whatever feels appropriate, keeping the rules in mind, you will accept that as your value of supply. So simple. Whatever you have given, open market value. Not available, whatever you received. Not available, whatever you gave, like kind quality. Not available, whatever you received. And last option is to take best judgment. And you always have to follow the chronology. Only for services, because determining cost is little difficult. For services, you can apply this Rule 31 of best judgment before Rule 30. Otherwise, so always you have to follow the chronology. Right, ma'am? And then Rule 28 says, if you are dealing with your related person or distinct person, then see, if full ITC is available, whatever I am supplying to my related distinct person, if full ITC is available to my related distinct person, then so whatever we declare on the invoice, that will be accepted as open market value, that will be accepted as the value of supply. If full ITC is not available, then you will take whatever you have given, open market value. Not available, like kind quality. Not available, monetary value or residuary point you will see. Whatever answer you get here, you can compare it. If I am giving to my agent and agent will further give it to customer, or I am supplying to principal, principal will further give it to, not agent, sorry, here this is related distinct person. So I give to my related distinct person and they will further supply it to their unrelated customer. I am giving to my related distinct person and they will further give it to their unrelated customer. Then for whatever price they will give to their customer, 90 percentage of that I can take as value of supply between us. All this only when full ITC is not eligible, right? If my recipient is eligible for full ITC, whatever we declare will be accepted by government as value of supply. If full ITC is not available, then you will do this. Open market value, like and quality, Rule 3031, or if there is a further supply happening, you take 90% of the further supply price. Whatever you feel is beneficial for you, whichever is lower, basically, whatever benefit you feel like, because this is given in a proviso. So you can apply this over and above main rule. It is okay. Whatever is beneficial, you can take it. Right. If related companies are giving corporate guarantees, see, if a director is giving any personal guarantee, then as per RBI guidelines, nothing can be charged for it. RBI is saying that a director cannot charge from company to give personal guarantees to take loan. In that case, because as per RBI guidelines, director cannot charge anything, value of supply will be zero, and GST will not be applicable. However, for corporate guarantees happening between related companies, again, if the company is eligible for full ITC, whatever you declare will be accepted as value of supply. But if company is not eligible for full ITC, then in that case, whatever actual consideration you are charging from your related company to give corporate guarantee, or 1% of guarantee amount per annum, whichever is higher, will be taken as the value of supply. You have to take 1% of guarantee amount, not of loan amount. Loan could be 10 crore, but if I am guaranteeing 5 crore, I will take 1% of 5 crore, that too per annum. So if loan is of 5 years, it will become 5 5%. Loan is of 6 months, it will become 0.5%. 1% per annum guarantee amount or actual consideration that you are taking to give this guarantee, whichever is higher, will be taken as the value of supply for related companies giving corporate guarantees to each other. Right, ma'am. Then talking about Rule 29. Rule 29 says if principal is supplying goods to agent or agent is supplying goods to principal. Mhm. Only goods covered here, not services, because Schedule 1 covers only goods. Right. So if principal supplying goods to agent, agent supplying goods to principal, forget everything, no chronology, nothing. There's an open option available. Either open market value of the goods or whatever further you are going to charge from your customer, 90% of that, whichever is beneficial you feel like, so you can take as your value of supply. Rule 30 we have already seen, monetary value cost into 110%. See, if nothing is available out of here, then last option is to apply Rule 30, Rule 31 only. Rule 31 is best judgment assessment basis, whatever you feel right you can take as the value of supply. Then we also have lottery, betting, gambling, online money gaming, horse racing, casino and all. So for lottery, we are saying the state governments, local authorities organize lotteries. So whatever is the ticket price or whatever is the face value, whichever is higher you have to take. Consider it inclusive of 40%. Make it exclusive. Earlier it was 28, now it is 40. So face value of the lottery ticket or the actual ticket price, whichever is higher, make it exclusive of 40%, and that is your value of supply. For betting, horse racing, gambling, whatever 100% money you are putting in it, that is your value of supply. Even online money games, casinos, whatever 100% money you are putting in casinos game, even if anything is returned to you later, nothing will be reduced. Once whatever 100% you keep in the game or so, fully will be taxable as your value of supply. However, if you are winning in the game, you don't withdraw the winning and you continue your winnings in the same game, it will not be taxable again. But any new money you are putting in, or maybe you are winning from this game, withdrawing, putting it in another casino and all, 100% everything is going to be taxable only. Right, ma'am. Talking about 5 special valuation rules. First is for Forex. Rule 32 sub rule 2A and Rule 32 sub rule 2B. You have this option to either go with the chart method or the table method. If you are opting for table method, then at least for remaining part of the year till 31st March, you will have to continue. So from chart to table, anytime you can shift. Table to chart, you cannot shift mid of the year. You have to wait till the start of next financial year. Right. In the chart method, you simply ask, are the two currencies involving INR or not? The answer comes as no. I am exchanging dollar for euros, yen for pounds or so. In that case, I will convert currency 1 into INR. I will convert currency 2 into INR. Then whichever is lower. Normally answers will be similar only, otherwise geographical arbitrages, triangular arbitrages can happen. So whatever amount of dollars you are exchanging for whatever amount of euros, you multiply in rupee, it will be almost similar only, but still you take lower of the two and 1% of that will become your value of supply. However, if the currencies are involving INR, I am exchanging dollar for rupee, yen for rupee, pounds for rupee or so, in that case I will ask, is the RBI reference rate available for that currency? The answer comes as no. Then whatever INR I have given or taken, I will take 1% of that as the value of supply. But yes, reference rate is also available. Then I will check the difference of the reference rate with my actual buying selling rate. So the reference rate is 94. But my forex dealer gave me for 95, maybe, let us say, but when I go to sell he is taking only at 93. So whatever actual margin he is keeping from the reference rate, that margin becomes your value of supply. If reference rate is not available, then to whatever, either you will give rupee or you will take rupee, whatever rupee you have given taken, 1% of that will be your value of supply. Table method says up to 1 lakh rupees if you are exchanging, up to 1 lakh rupees, then we will say you take 1% of it or 250 rupees, whichever is lower as your, sorry, whichever is higher as your value of supply. Meaning if I'm exchanging 70,000, then 70,000 into 1% will be 700, or 250, whichever is higher, 700 will come. But if I'm exchanging 20,000, then 20,000 into 1%, 200, or 250, whichever is higher, 250 will come. Meaning at least 250 will be value of supply here. Then more than 1 lakh up to 10 lakh we will say. First 1 lakh 1%, 1000, plus whatever is above 1 lakh 0.5% of that you have to take. More than 10 lakh, first 1 lakh 1%, 1000. Next 9 lakh 0.5%, 4500, plus whatever is above it you will take 0.1 percentage and compare it with 60,000. Whichever is lower will be your value of supply. So in table method, minimum value of supply will be 250 and maximum value of supply will be 60,000. Answer will always range between somewhere 250 to 60,000. 1%, 0.5%, 0.1 percentage. Right. Talking about air travel agent. Domestic booking 5% of basic fare, international booking 10% of basic fare you have to take, excluding all the charges, taxes, whatever is the basic fare of that 5% and 10% you have to take. Then talking about life insurance. Now, generally, life insurance is taken by individuals and families are exempt, but group life insurance are still taxable, right? So, for life insurance, we will say if it is only risk coverage, then whatever 100% of the premium you have paid will be your value of supply. Single annuity plan, 10% of premium. If it is investment plan, basically premium minus whatever is allocated to investment, whatever is left will be your value of supply. But there's a condition. This allocation should be prior intimated to the policyholder at the time of collecting premium. If you have not intimated the allocation, then everything will go to the other residuary point, which says first year of the policy it will be 25% of the premium, second and subsequent year of the policy it will be 12.5% of your premium as your value of supply. Then talking about second-hand goods, if you have not taken ITC at the time of purchase, only then you can take benefit of this second-hand goods rules, which says you can take selling price minus purchase price. Whatever is your margin as your value of supply, not the full sales value. But if you are taking depreciation under Income Tax Act on motor vehicles, then you take selling price minus depreciated value and not purchase price, only for motor vehicles. If at all there is a loss, meaning this margin comes negative, you will ignore it. No problem, value of supply will be zero in that case. For any voucher, coupon, token, stamp and all, whatever is the redemption price, that will be considered as your value of supply. Right, ma'am. Then we have Rule 33, which talks about pure agent. So, pure agent says that supplier is incurring some expenses on behalf of recipient, but these are not incidental expenses. The recipient is in contract with some another third party to incur these expenses. He just told the supplier, "Will you please incur on my behalf and later recollect me from me showing separately in the invoice?" In this case, if supplier is not taking any benefit of these good services, not taking any ownership, not enjoying these good services, purely incurring expenses because recipients had to do so and recovering exact same amount, you are known as pure agent and these expenses will not form part of value of supply. Just there is one condition: in invoice you have to show these amounts separately on actual basis. If you merge it with your supply only, then everything will become taxable. Showing separately in invoice, it will not be taxable. If your transaction is not happening in INR, then for goods, you can convert as per CBIC rate as on time of supply. For services, you will convert as per generally accepted accounting principles rate as on time of supply. Right? This is all about value of supply chapter. 7 supply, 8 composite mix supply, 9 charging section, 10 types of tantrums composition levy, 1 balle balle exemption, 12 o'clock time changes, so 12 time of supply goods, 13 time of supply services, 14 is the rate change section, 15 one whole and sole section along with all the valuation rules to determine the value of supply. Then we start with section 16, which is eligibility and conditions to claim ITC. As soon as you turn sweet 16, your family starts to put conditions, restrictions on you. So section 16 is eligibility and conditions to claim ITC. 16.1 talks about eligibility. So you have to be a registered person, plus whatever you are purchasing has to be in course furtherance of business. Then you can take ITC in your electronic credit ledger. 16.2 talks about conditions. Once you are eligible, there are 6 conditions that you need to fulfill to take ITC properly. First, you should be having invoice or any valid tax paying document. Invoice, debit note, bill of entry, ISD invoice, could be anything which can evidence that yes, you have paid taxes as per Rule 36. Then based on this invoice, you can take ITC. you are having invoice, your supplier should show the details of this invoice in GSTR 1 1A or invoice furnishing facility. You should have received the goods or services. The ITC communicated to you should not be restricted. Your supplier has paid the tax to government and you have also filed a valid return GSTR 3B to take the ITC. All these conditions are to be fulfilled for you to validly take ITC. Right. Invoice can be any document. Supplier has to show it in GSTR 1 1A IFF. Talking about the receive point. If you are receiving goods in installments, lots or so, then whenever you receive the last installment pertaining to that invoice, you will get ITC. You will not take proportionate ITCs that if I've received half lot, I take half ITC. No. Once you receive the full last lot installment, only then you will be taking this ITC. If there is a case of bill to ship to model, meaning recipient has not received and directed supplier to give the goods to someone else, ship it to someone else and give the bill to the original buyer. In that case also it's okay, buyer will be deemed received like he has received the goods and he can take the ITC in case of bill to ship to model. Then for X works contract, Xbox contract, we say supplier's obligation is finished when he is giving delivery outside the factory to the transporter of the recipient. The supplier's obligation is overdone. Now the further transportation and everything is recipient's responsibility. So even if recipient has not literally received the goods at his premises, but the moment supplier gives delivery, recipient's figurative responsibility has started only. So it is okay. Here only, when in case of X works contract, supplier has given the delivery to transporter, the recipient can take ITC. It is just like deemed you have received the goods, right? Even though supplier has filed GSTR 1, ITC is reflecting in your 2B. But if it is blocked for you, restricted for you, you are not going to take that ITC. Talking about the tax paid point. Read with section 41, rule 37A. It says that if my supplier has filed GSTR 1, credit is reflecting in my 2B, I will take ITC. I cannot literally wait for my supplier to file 3B, pay the taxes, then I file 3B, then I take ITC. Not possible. So it's okay, supplier filed 1, credit reflecting in my 2B on self-assessment basis, I will take ITC. This is correct ITC, no problem. However, after the end of financial year, whatever ITCs I've taken in this financial year, I will check till 30 September that supplier has filed 3B and paid the taxes to government. If yes, I don't have to do anything. I have taken ITC, that is correct, perfect, all good. However, if my supplier has not paid the taxes to government till 30 September, then I have time till 30 November to reverse this ITC. If I reverse it prior to 30 November, I will not have to pay any interest. If I reverse it after 30 November later, then interest from utilization of ITC till reversal of ITC, I will have to pay to government. See, if not today, in future, you will have to reverse because you are violating this condition of tax paid by supplier. So it is better you reverse till 30 November. So without interest, you can reverse. Later, if the supplier is paying to government, you can even re-avail that ITC. But once if supplier is not paying till 30 September, you have to reverse till 30 November. Right. Then we also have rule 37, which is the 180-day rule. It says whatever is the date of your invoice, from there within 180 days, the recipient has to pay the consideration to the supplier. If within 180 days consideration is not paid or it is partly paid, then proportionate to whatever is not paid, immediately in next 3B, the recipient will have to reverse ITC. That too from utilization till reversal along with interest. So whatever is your invoice date as a recipient, within 180 days from there, you have to pay the consideration to supplier. If you are not paying within 180 days, then immediately when the 180 days expire, whichever next 3B you are filing, in that next 3B, you will have to reverse ITC, that too along with interest at the rate of 18% from utilization of ITC till reversal. But there are 3 exceptions where this rule is not applicable. RCM supplies, Schedule 1 supplies, or I have not made payment to supplier, but on behalf of, on the direction of supplier, I've given payment to some third party. Then RCM Schedule 1 and third party payments, we will say 180-day rule is not applicable. Otherwise, all the transactions from invoice within 180 days, if recipient is not making payment, proportionate to whatever payment you have not made, that much proportionate ITC you will be required to reverse. Right, ma'am? Talking about section 16.3, it says if you are purchasing any asset, you take depreciation on asset, that is not a problem. Let's say asset is of 1 lakh rupees plus 18,000 GST. On 1 lakh, you take depreciation, nobody is stopping you. But on this 18,000 component, either you take GST credit or you take depreciation under Income Tax Act. Both benefits you cannot take. One mistake students do, students feel you cannot take depreciation of 1 lakh also. You can take depreciation on 1 lakh, no problem. On this 18,000 GST figure, either you take credit or you take depreciation, both benefits you will not get. Then section 16.4 talks about last date to avail ITC. So it is 30 November after the end of financial year or actual date of filing annual return, whichever is earlier is the last date to avail ITC. 16.5 is not applicable in the syllabus. 16.6 says my registration got cancelled today. Now today I was eligible to take ITCs because 30 November or the actual date of filing annual return did not come. So I could have taken ITC today, but I got cancelled. Now later there is revocation of cancellation happening. Now the day when revocation is happening, my last date to take ITC is gone. Now what to do? I was eligible here on cancellation, but I got cancelled, so I could not take ITC. Later I am getting revoked, but then the last date to take ITC is gone. What to do? 16.6 says say. 16.6 says that see, 30 November or actual date of filing annual return, whichever is earlier, this time is already there with you. Or we are saying within 30 days from revocation of cancellation, whichever is later, we will allow you to take all those ITCs which you could have taken here. So if the last date is pending, then so no problem, you take ITCs. But 30 November is gone, after that revocation is happening, what to do? Within 30 days of revocation, you take all those ITCs that you could generally have taken if you would not have been cancelled. This is section 16.6. Right, ma'am. Then 17 पे खतरा, danger number 17 पे खतरा, section 17 talks about apportionment of credit and blocked credit. Now there are two things here, apportionment of credit as well as blocked credit. Blocked credit is section 17.5. Apportionment, we have rule 42, rule 43, rule 38. Rule 38 is specifically for banks and NBFCs, which says if you are doing transactions with your distinct person, you take full ITC. Whatever is blocked non-business exclusively, you don't take that ITC. The remaining 50% you take, 50% you let go. Rule 42, 43 talks about the apportionment. ITC, which was for exclusively non-business, exempted, non-taxable purposes, block credits, you ignore since beginning only. Remaining all ITCs once you will take in your credit ledger, and then from it whatever is attributable to exempt you reverse, attributable to non-business you reverse, whatever you have taken will stay in your credit ledger. In your exempt turnover as well as total turnover, you have to add you have to add land building at the stamp duty value, warehouse goods bond to bond transfer, you have to add sale of securities 1%, you have to add in your numerator, which is exempt supply also, as well as your denominator, which is your total turnover also. So total will include everything, exempt taxable, 1% of sale of security, then land and building at stamp duty value, warehouse goods. Total will include everything. Exempt will include exempt, non-taxable, nil rated, RCM supplies. This will all be exempt. If you are bank or NBFC financial institution, then even your interest income will become exempt. However, for other people, government has given this benefit that other people, if you are having interest income, even though it is generally exempt, but you don't have to include it in exempt turnover. In total turnover, you include interest, but in exempt turnover, you don't include interest. So it is a benefit, reversal will come less. Only if you are not a bank or NBFC. If you are bank NBFC, then the interest will form part of your exempted turnover also. Right, ma'am. And for capital goods, once you take full ITC and then divide it by 60 for 60 months, because the useful life of capital assets in GST is 60 months, 5 years for all. So every month for 60 months, you will keep doing reversals, multiply by exempt upon total turnover, multiply by exempt upon total turnover, you will keep reversing the ITCs. Talking about blocked credit, if you are purchasing motor vehicle, but it is designed to carry goods, you can take ITC, no problem. Or it is railway, bicycle, special purpose vehicle, two-wheeler, three-wheeler with engine capacity only up to 25 cc, you can take ITC. But any motor vehicle which is designed to carry passengers, and the seating capacity is less than equal to 13 passengers, then ITC is blocked. Even if it is for your business purpose, ITC will be blocked. More than 13 passenger, ITC allowed. Goods, bicycle, railway, special purpose, 25cc, two-wheeler, three-wheeler, all these cases, ITC will be allowed. However, ma'am, if I am in a taxi business, my business is only passenger transportation, then ITC will be allowed. Or I am in the business of selling the cars further, then ITC will be allowed. Or we are saying I am running a motor driving school. In this case, ITC will be allowed to me. Other all cases, ITC for motor vehicle designed to carry up to 13 passengers, ITC is going to be blocked. And for whatever motor vehicle ITC is blocked, its insurance, service, repair, maintenance is also blocked. If original vehicle ITC available, insurance, service, repair, maintenance ITC also available. Same for aircraft and vessel also. If you are further supplying aircraft vessel, you are teaching, navigating, driving, or you are in a business of goods transport, passenger transportation, ITC will be allowed. Otherwise, private jets and all, ITC is going to be blocked. And for aircraft vessel whose ITC is blocked, even insurance, service, repair, maintenance, ITC is going to be blocked. But I am insurance company, I am giving claim, then my ITC will be allowed. I am manufacturer, my ITC will be allowed. That person to whom the car, vehicle, vessel, aircraft belongs, for that person, insurance, service, repair, maintenance, ITC will be blocked. Food, beverages, outdoor catering, beauty treatment, cosmetic, plastic surgery, health insurance, life insurance, leave, travel concessions, all these situations, gym memberships, ITCs are going to be blocked. But if there is any statutory obligation by government, ITC will be allowed. Or if you are further supplying them, ITC will be allowed. Construction works contract of any immovable property, ITC will be blocked. Plant machine, ITC is allowed. However, land building, civil structure, telecommunication tower will not be considered as plant factory. There ITC will be blocked. Again, I am a works contractor. I am building it for further supply. You will get ITC. For own account, if construction works contract is happening, even if business building, ITC will be blocked. Safari Retreats case law is now removed here. Right, ma'am. However, if you are capitalizing these expenses, then ITC will be blocked. General, small repair, renovation, alteration expenses I'm charging in P&L, then ITC will be allowed to me. If you are purchasing something for personal consumption, you are a composition person. Purchasing for corporate social responsibility, you are non-resident taxable person. Then only import of goods ITC is allowed. Otherwise, NRTP, all other ITCs are blocked. If you are doing fraud, willful misstatement, suppression of fact, all these situations, your ITC is going to be blocked. Any goods lost, destroyed, stolen, written off, given by way of free samples, ITC is going to be blocked specifically. Right, ma'am. If there is a change in usage, so let us say I am a regular person, but now I am shifting to composition, or I am a composition shifting to regular, taxable to exempt, exempt to taxable. These are all special circumstances, section 18. As soon as you turn 18, you are now adult from teenager. So teenager to adult. Similarly, taxable to exempt, exempt to taxable, regular to compo, compo to regular. All these special situations covered in section 18. So see, if you are shifting to compo, you will reverse ITC. Regular, you will avail ITC. Again, you're shifting to exempt, you will reverse ITC. Here you will avail ITC. Whenever you have to avail ITC, you will not get ITCs older than invoices which are older than 1 year. So last 1 year only you get. And that too only input and capital goods ITC you get, input service you don't get. Right? So input you can match it exactly invoice by invoice. Which stock is lying with me not older than 1 year, I will match with invoice, I will take ITC. But for capital goods, whenever you are taking ITC, do 5% quarter reduction for whatever quarters you have used. Quarters in GST are fixed. Jan, Feb, March, April, May, June, July, August, September, October, November, December. So even 30 April to 1st May, or let us say, I will say 30 March to 2nd April will be 2 quarters here, because Jan, Feb, March and April, May, June. So we are simply saying you have to check the dates, and whichever date is falling in whichever quarter, that full quarter you have to consider. So if I'm availing ITC on capital goods, 5% for every quarter that I have used, I will reduce, and then whatever is remaining, that ITC I will take. But in case of reversal, even if the invoice is older than 1 year, For all the inputs and capital goods, you will have to do reversals, not for input services. All the inputs lying in stock with you, you will do invoice wise reversal. And for capital goods, you check from 60 months, whatever proportionate life is left, one shot reversal you will do. So when you have to avail ITC for capital goods, you do 5% quarter reduction. When you have to reverse ITC for capital goods, you will be doing a 60 months proportionate calculation here. Right, ma'am. However, my usage is not changing. I was unregistered person taking now fresh registration for the first time. If I was already registered and my usage is changing, then these provisions will apply. But I am saying my usage is not changing. I was unregistered person. Now I am becoming registered person. First time registration. Then no input service ITC you get. No capital goods ITC also you get. Only inputs ITC you will get. That too not older than 1 year. That too if you have applied within 30 days of becoming liable for registration. If you apply late after 30 days, then also you will not get ITC. So if you are applying within 30 days, then only for inputs not older than 1 year in case of fresh registration, you will be getting input tax credit. If there is a sale or disposal of capital goods, then whatever is the tax on transaction value or whatever was the tax paid originally minus 5% quarter reduction for every quarter, whichever is higher, this amount I will pay on my sale disposal of all the capital assets. If your business is transfer, amalgamating, demerging, anything, ITCs can also be transferred. In case of demerger, in the ratio of assets, your ITC will be given. There is a condition that when demerger is happening, asset plus liability both should be transferred. However, ITC will be transferred only in the ratio of assets, and that to state wise, every state, whatever assets you are transferring, that state, whatever total ITC you have, you can apportion it to the demerged entity. Right, ma'am. Talking about manner of utilization of ITC. So the credit of IGST will be first used to pay IGST only, compulsory, and then C or S, any manner, any proportion. Whoever is in the need of more credit, I can use my IGST credit for C or S. However, until and unless I fully exhaust IGST credit, I will not proceed further. It is compulsory that you have to exhaust full IGST. Only then you will move to CGST. You use CGST for CGST first. Then if there is any need, you can use it for IGST. After that, it is not necessary that CGST is exhausted. There might be balance in C. I can still go to SGST once I have done using C. S will be used for SGST and then if needed used for IGST, which means ma'am, C and S cannot be used for each other. This is the reason. There might be balance in CGST, but payable is of S, so I will go further. I cannot exhaust C. Right. But because I can be used for all, it is a condition that till you fully exhaust IGST, you will not proceed further. Compulsory IGST, you will exhaust. Use it first for I only, then for C or S, whoever is in need. After exhausting IGST, you go to C. C will be first used for S and then C will be first used for C and then I. S will also be first used for S and then I. But C and S cannot be used for each other. Until you have fully exhausted IGST, you will not proceed further. You will not touch C or SGST. Right, ma'am. Then we have Rule 86A, which says even though you have balance in credit ledger, they can restrict it maximum for 1 year. If you have violated the provisions, you have taken ITC without receipt of goods and all, fake invoices and all. And Rule 86B is if your taxable turnover is more than 50 lakh rupees in a month, then whatever is your total outward payable, maximum 99% of it, they can allow you to use ITC, 1% compulsory, you have to pay using cash. However, if you have paid more than 1 lakh rupees of Income Tax Act, you have taken GST refunds, you are government people, or from 1st April itself till today, you have already paid more than 1% in cash, then Rule 86B is not going to be applicable on you. Right, ma'am. So as soon as you turn sweet 16, family will start to put conditions, restrictions on you. 17, Satra pe khatra, apportionment, block credit. 18, special circumstances. Why special? Teenager to adult. So taxable to exempt, exempt to taxable, regular to compo, compo to regular, unregistered to registered, sale disposal of capital assets, all covered in section 18. Then smallest single digit number is 1 and biggest single digit number is 9. So 19 is the small person job worker along with big person principal. So special provisions of section 143 along with section 19 are the provisions of job work. So it says the principal who is sending the goods to job worker compulsorily has to be a registered person. Job worker can be registered or unregistered, that is not a problem. So principal can send the goods to job worker without paying taxes, just under delivery challan and e-way bill, it is okay. The job worker will have to return the inputs within 1 year plus extension of 1 year, and capital goods within 3 years plus extension of 2 years. For molds, dies, jigs, fixtures, etc., time limit will not apply. Other cases, job worker has to return the goods back in this time. If this is happening, then while principal is sending or while job worker is sending, nobody has to pay any GST on those goods. Right, ma'am. However, if the goods are not returned within this time, then originally when the principal had sent the goods, we will consider that at that time only supply was happened. So now principal will have to show it in GSTR 1, 3B, pay the taxes, interest, everything. Right, ma'am. The principal can also directly tell its supplier to send the goods to job worker directly. It is okay in that case also. Principal can take ITC, no problem. See, understand. When principal is sending the goods to job worker, the date on which principal is removing the goods, 1 year or 3 years, will start from there only. So let's say principal removed the goods on 20 December, job worker received on 23 December. 1 year for inputs and 3 years for capital goods will start from 20 December only. However, if I am telling my supplier on 14 Jan supplier removed the goods, on 17 Jan job worker received them, in that case I will say 1 year plus 1 year, 3 year plus 2 year will start from 17 Jan. So if principal is sending the goods to job worker, whenever principal is sending, from that this period will start. However, when I am telling my supplier to directly send the goods to job worker, then when job worker is receiving, from that date I will start calculating 1 year plus 1 year or 3 years plus 2 years. The principal can tell the job worker to directly supply the goods to customer from its premise only, but that will form part of aggregate turnover of principal only. Time, value, place, everything will be taken from the point of view of principal. If job worker is unregistered, I can simply declare my job worker's premise as my additional place of business and do deliveries from there to customer, but it will not be a part of job worker's turnover. Simple? Yes, ma'am. Then talking about section 20, which is ISD, Input Service Distributor. See, what looks like 0D? Who is opposite? Who does opposite things in life, ma'am? I am doing opposite things in life, right? So 20 is ISD, and immediately 21 says one was to be given, you gave two, we will take one back. We will take one back from two. So if there is any excess distribution happening of ISD, we will do recovery. Recovery will be done from the recipient, that too along with 18% per annum interest. Input service distributor concept says not input, not capital goods, only input services ITCs. These head office can allocate to the branch offices. Earlier RCM was not allowed, but now even RCM credits you can distribute to the branch offices. If your branch is in the same state, then your I will go as I, C will go as C, and S will go as SGST. However, if your branch is in different state as of ISD, then entire credit will be converted into IGST and given to the branch offices in the ratio of turnover of the branches. See, if there is any specific attributable ITC that this expense was done only for this specific branch, then you give ITC to that branch only. But for common input services based on the turnover ratios which will be given in the question, you have to allocate the credit to all the branches. The eligible credit as well as ineligible credit, both you have to allocate. If it is ineligible, the recipient branch will think to not take credit. ISD don't have to think anything. ISD will allocate eligible, ineligible, everything in the same month only. If you mistakenly miss out to allocate some credit in the same month, later month you cannot. The same month as of the invoice, credit note, debit note, you have to allocate the ITCs. Right, ma'am. 7 supply, 8 composite mix supply, 9 is the charging section, 10 types of tantrums to pay less taxes, section 10 composition levy, 1 balle balle exemption, 11A also, 12 time of supply goods, 13 time of supply services, 14 rate change, 15 value, 16 eligibility condition, 17 pe khatra blocked credit, 18 special circumstances, small number 1, big number 9 job worker principal, 20 opposite of 2 is S, who is opposite ISD, and 21 a recovery of excess distribution from ISD. Recovery is done from the recipient, not from the ISD. Right, ma'am. Then we start with registration, which is section 22 to section 30. I hope you guys are enjoying, having fun. Super fast. I'm making you recall everything. We are not skipping anything, but we are going very fast because I'm not explaining anything to you. If you're liking the video, do actually like the video, drop a comment, share it with your friends, subscribe to the channel. You understand this takes a lot of effort actually to put down everything on a single page and consolidate everything for you so that it's helpful one day prior to examination to you. So guys, do show some love, please. I had a very, very severe throat infection after the Vijayawada, Hyderabad marathons and all. So I've recovered now. Only I was just waiting. I get my voice back and I want to take this Scribble revision on YouTube. I was dying to take it. I am not taking it live for this reason only, that if at all my throat stops, there's some problem, at least I can stop recording, I can take medicine, drink water, restart the recording, merge and upload. For this reason only, I'm not taking it live. Otherwise, I was so excited to take this Scribble revision live with you all, but I'm still not confident about my throat status. As of now, I've taken so many injections and medicines, so I'm recording it for you. So do show some love if you are genuinely finding the video helpful. Right, ma'am. Coming back to registration, 2 to 22, you are earning double double. You are a person liable for registration. 22 says liable, 23 says no, not liable. 24 says, what is this liable, not liable nonsense going on? You just shut up and take compulsory registration under GST. Oh, okay, I will take registration, but how to take? Tell me the procedure. So the procedure to obtain registration under section 25. Oh, bhai sahab, मैं तो थक गई. I am tired. This big procedure, am I going to do it twice? No. Therefore, section 26 deemed registration. 27 talks about casual taxable person and non-resident taxable person. Then 28, 29, 30, amendment, cancellation and revocation of cancellation. This is the entire chapter of registration, starting one by one. Section 22, 2 to 22, you are earning double double. You are a person liable for registration. So if your aggregate turnover is exceeding the threshold limit given in section 22, you will take registration. Aggregate turnover, you will check for entire India pan wise, but then eventually you will take registration only in those states from where you are making taxable supply. How to calculate aggregate turnover? Add everything: taxable, exempt, intrastate, interstate, export, all types of supply that you are doing on a same pan, everything will be a part of your aggregate turnover. However, CGST, SGST, IGST, UTGST says, or if you are paying any RCM on your purchases, these things will not be a part of your aggregate turnover. So all the types of supplies that you are making under same pan, exempt, taxable, non-taxable, interstate, intrastate, export, everything will form part of your aggregate turnover. This same aggregate turnover also applies for composition scheme. There is just one difference. In composition scheme also, pan wise, everything I will include. Not include GST, not include inward RCM. Or if you have given loan deposit advance to someone and you are earning interest discount income, that do not form part of composition scheme turnover. So if I'm putting money in FD, I earn interest, that will not be turnover as per composition scheme. As per GST, even that will be a part of my aggregate turnover. So there is just one difference: interest income. See, if I am supplying some goods or services and because of late payment I receive interest, this is a normal taxable interest. This will form part of turnover everywhere. I am talking about giving loans, deposit, advances. Those interests are exempt in GST. Those exempt interest will form part of registration aggregate turnover, but it will not form part of composition aggregate turnover. Right, ma'am. So if this turnover is exceeding the threshold limit given in section 22, I will take registration only in those states from where I'm making taxable supply. So if I'm making any taxable supply from no MMT, if I'm making any taxable supply from Nagaland, Manipur, Mizoram, Tripura, making taxable supply from no MMT, Nagaland, Manipur, Mizoram, Tripura, then my pan India turnover limit will become 10 lakh rupees. Even if I am doing business in multiple states, I will take 10 lakh total for entire India. But I am not making any taxable supplies from here. No. Then you check as per other states, whatever should be applicable. Let's go to other states. If I'm making any supplies, taxable exempt, any kind of supply from stamp in Uttarakhand, Sikkim, Telangana, Arunachal Pradesh, Meghalaya, Puducherry, Uttarakhand, Sikkim, Telangana, Arunachal Pradesh, Meghalaya, Puducherry, Uttarakhand, any supply from here, my entire India threshold will be 20 lakh. Let us say I'm supplying shoes from Nagaland as well as Arunachal Pradesh, then I will take lower of the two. Entire India limit will be 10 lakh. Total, I have to check 10 lakh. Right, ma'am. And for other states, other than no MMT and stamp in Uttarakhand, if I am dealing in services or goods plus services, my limit will be 20 lakh. If it is intrastate exclusive intrastate goods, then I will get 40 lakh benefit. See, understand, normally anyone dealing in goods would be at least having interest discount income, right, which forms part of turnover as per registration turnover. No problem, government says if there is interest discount income with goods, it is okay, your limit will still be 40 lakh. Just because of interest discount, which is service, we will not tell you to come to 20 lakh. But let's say I am supplying shoes and I also give teaching services, then any normal other services limit will be 20 lakh. But shoes plus just interest income, it's okay, you will get the 40 lakh benefit. You don't have to ignore interest. Interest will form part of turnover, but because of interest your threshold will not fall down to 20 lakh rupees. Otherwise, normally any other service if you are giving, your turnover limit becomes 20 lakh. So Nagaland, Manipur, Mizoram, Tripura, taxable supply 10 lakh. Sikkim, Telangana, Arunachal Pradesh, Meghalaya, Puducherry, Uttarakhand, any supply 20 lakh. Other states, pure services or goods plus services 20 lakh. But exclusive intrastate goods 40 lakh. If you are a supplier of ice cream, pan masala, fly ash, bricks, blocks, precious metals, other roofing tiles, all the same goods just like composition other than aerated water. In composition, aerated water comes. Other than that, ice cream, pan masala, tobacco, fly ash, bricks, blocks, precious metals, other roofing tiles here. They use the term manufacturer would be ineligible. Here they are using the term supplier. So basically any supplier who is supplying ice cream, pan masala, tobacco, fly ash, bricks, blocks, precious metals, other roofing tiles will not get 40 lakh benefit. For them 20 lakh will only be the threshold, even though it is exclusive intrastate goods. Right, ma'am? If I am transferring the business, amalgamating, demerging, the transferee company will be required to take registration under GST. Right, ma'am. So 22 says liable, 23 says no, not liable. If I am doing exclusively exempted supplies, non-taxable supplies, I am exclusive agriculturist. Individual HF exclusive agriculturist, growing cultivation out of land and selling. Land can be owned, rented. Cultivation I can do, I can hire labor, it is okay. Till the time it is land, it is cultivation happening. Agriculturist exclusive. You don't have to take registration. Or you are doing only RCM outward supplies, then your recipient will take registration and pay GST to government. What is the need for you to take registration? But if you are a metal scrap supplier, if you reach section 22 threshold, you will take registration. Other than metal scrap people making only RCM outward supplies, exempted supplies, non-taxable supplies, nil rated supplies, no need to take registration under GST. Forget everything, forget the threshold limit. If under section 24, you are falling in the list of I-9 creation, you have to take compulsory registration under GST. If you are making interstate supply, but services or notified handicraft goods predominantly made by hand, machine use is not there or very less, then you can take your 10, 20, whatever benefit is available as per section 22. After that, you take registration. Other people, normal taxable goods, if you are supplying interstate, forget the threshold. Even 1 rupee interstate supply I do of this mobile phone, let us say, only one mobile I sold, I will have to take compulsory registration. 9, if you are Ola, Uber, Oyo, Trivago, under section 9(5), government has told you to collect tax and pay to government, you will have to take registration. C for casual taxable person. Again, if I am that notified handicraft supplier, I generate e-way bills up to section 22, I can take the benefit. If I am taking RCM inward, see, person supplying RCM goods services is exempted from registration. So of course, who is taking RCM supplies will have to take compulsory registration and pay RCM. E for I am an e-commerce operator who has to collect TCS under section 52. See, if you supply services through ECO up to section 22, it's okay, you don't have to take registration, TCS will not be collected. But if you are supplying goods, if you are supplying goods through e-commerce operator where TCS comes, you should be having PAN, you have to declare the PAN number on common portal, you have to take enrollment number. It is okay. You can stay unregistered, but interstate supply you cannot do. More than one state you cannot do. Enrollment number you should have. All those conditions, if you are satisfying, you can remain unregistered, TCS will not be collected. But if you are not satisfying any condition and you want to supply goods through e-commerce operator, you have to take compulsory registration. Services, there is no condition. Blanketly till you reach section 22, don't take registration. Whether you want to supply interstate, intrastate, through eco, any service provider will take registration when you reach section 22 threshold, only then. For goods, if you want to remain unregistered and supply through ECO, you will have to fulfill the conditions. The ECO who has to collect TCS will of course take compulsory registration under GST. A for taxable agent on behalf of taxable principal. But let's say I am APMC commission agent. My supplier is not registered agriculturist, my goods are not taxable, my commission is not taxable, I will not take registration. Other normal agents in GST will have to take compulsory registration because they issue invoices in their own name. T for TDS deductor, ISD, OIDAR, online money gaming, and non-resident taxable person. All these people, irrespective of their turnover, will have to take compulsory registration under GST. Okay, how to take? Tell us the procedure. GST REG01 Part A, Part B. You have to file, furnish all the details. There are three rules important that you have to remember here. Rule 10, 10A and 10B. Rule 10 talks about effective date of registration. So the day on which you become liable. If you are applying within 30 days from there, then your original liability date is only your effective date. Whenever you get RC is not relevant. But if you apply after 30 days of becoming liable, then whenever you are receiving the registration certificate, that becomes your effective date of registration. Rule 10A talks about bank details. It's okay, you can furnish RG01 without giving bank details. But then within 30 days of you obtaining RC or first GSTR1 IFF, whichever is earlier, till that date, you will have to give the bank details. And Rule 10B talks about Aadhaar authentication. Re is if you want to apply for refund or revocation cancellation, your Aadhaar has to be authenticated mandatorily. If at all physical verification is happening, then in that case, department gets a 30 days time to do physical verification, issue you notice or RC and all. Rest everywhere, it is 7 working days for entire procedure. Earlier, there was a condition that you have to be present for physical verification, but now that condition is removed. Even if you are not present, department can come at your place of business, do physical verification. My God, this big procedure, am I going to do it twice? No. Section 26 says you do registration under SGST Act, you will be deemed registered under CGST, IGST, all the acts. State-wise registration you have to take. Tax-wise registration you don't have to take. Casual taxable person is not present in that state. NRTP is not present in entire India. There is business test in CTP and business test is absent in NRTP. These people come occasionally, do transactions and go back. At least 5 days prior to coming and starting transaction, they have to apply. Maximum they can take registration for 90 plus one time further extension of 90 days. Full estimated tax liability they have to deposit in advance to government. Later, whenever they go back, everything will be settled. If there is a core field change, you have to take approval from the proper officer. Core field, like let's say you're changing address, you're changing the trade name of your business, you're admitting a partner, retiring a director. These are all core fields. You have to take approval. Non-core field, simply mobile number, email can be authenticated via OTP and all. You can file REG 14, your RC will stand amended, no need for any approval. However, if you are changing PAN or you are changing entire state, you are changing PAN or you are changing state, in this case your GST number will change. So now amendment is not possible. You will have to apply for new registration and cancel the old registration. Cancellation can be genuine situations if you are yourself applying. Let's say I'm discontinuing my business, there is death, my representatives don't want to continue. I took voluntary registration, but now I don't want to continue. For general reasons, genuine reasons, you apply, officer will check everything. Till the time proceedings are continuing, your registration will be suspended and they will allow you to cancel. However, there are some cases where proper officer can even suo moto cancel your registration. When, ma'am, you are not doing business from your declared place of business, you are issuing invoices, but you are not doing any supplies, basically fake invoices. You are violating section 16, taking ITC, violating anti-profiteering provisions, violating rule 10A, not giving bank details in 30 days or GSTR1, whichever is earlier, or you are violating 16 rule 10A anti-profiteering provisions, or you are violating rule 86B, that 99 percentage rule, you are violating rule 86B. Or let us say it's you are a monthly return filer, it's been 6 months consecutively you are not filing return. QRMP person, 2 tax periods not filing return. Composition person is just required to file one return in your GSTR4, and that too 3 months overdue, the due date is gone, not filing return. After revocation of cancellation within 30 days not filing return. Taken voluntary registration, but it's been 6 months you are not commencing your business. You have done fraud, willful misstatement, suppression of fact. In all these cases, or you are showing more sales in GSTR1 compared to 3B, because payment you have to do in 3B1, you just have to show. So if you are doing anything out of this, proper officer can issue you a show cause notice, give you opportunity of being heard, and then suo moto cancel your registration. Till the time cancellation proceedings are going on, your registration will be suspended. Suspension is revoked from the original date when suspension is applicable. Oh my god, the registration got cancelled. Officer cancelled you suo moto. Within 90 days plus extension of 180 days, you can go and apply for revocation of cancellation. If you yourself had applied for cancellation, you cannot go for revocation. But if officer cancelled you suo moto, then within 90 days or plus one extension of 180 days, you can go and apply for revocation. Your registration was cancelled because you did not file return, because you did not give bank details, then first comply with all those things, and after that you go and apply for revocation. Right, ma'am. Now that I am registered, what I will do, I will issue tax invoices. So section 31 talks about last date to issue tax invoices and some other documents in GST. Talking about goods, if there is a normal supply of goods or there is a continuous supply of goods. Continuous supply could be, let's say, oil supplied through a pipeline. Now, in case of continuous supply of goods, whenever the successive statements or payments are involved, whichever is earlier, that will be your last date to issue invoice. But normal supply of goods, you need to ask whether your goods are involving movement or not. Let's say, yes, ma'am, goods are involving movement. Then before or at the time of removal of those goods only, before or at the time of removal of those goods only, maximum you have to issue invoice. But if your goods are not involving movement, then in that case we will say before or at the time of you actually giving the delivery, you have to issue invoices for continuous supply of goods, successive statement payment. If your goods are going for approval or return basis, then in that case either the original time of supply or maximum 6 months from removal, whichever is earlier, this period you have to issue invoices. Right, ma'am. Talking about services. Services, we will again see if the services are ceases in between, then up to cessation, whatever you have done, immediately you issue the invoice. If there is continuous supply of service and the due date of payment is ascertainable, then on or before this payment due date only you have to issue invoice. You don't have to wait for any further time. Maximum when the due date to payment comes, that is your last date to issue invoice. But there is no due date of payment ascertainable from the contract, then whenever actual payment is coming, you issue invoice. But if your payment is linked to completion of some event, that on this day when this much work is done, we will pay you. So the day on which this event happens, maximum then you will have to issue invoice. Continuous services means generally when the period is more than 3 months, could be like construction service also. For normal services, we are saying before service you can issue invoice, even after service you can issue invoice. How much after, ma'am? 30 days after completion of service, or it becomes 45 days for bank, NBFC, financial institution, insurance company, you can issue invoices. Right, ma'am. In case of bank, NBFC, financial institution, insurance company, and telecom operator, when they're doing transactions with their own customer, then 45 days, 30 days. But if they are giving services to their distinct person, same PAN, separate registration, then they don't need to comply with 30 days, 45 days. Whenever the supplier is recording in books, or all invoices end of the quarter together can be issued for all the services done with distinct person. Right, ma'am. If you are bank, NBFC, financial institution, insurance company, goods transport agency, passenger transport services, or multiplex screen, in that case, even if you don't issue invoice, it is okay. Whatever document you will issue will be deemed accepted as kind of invoice only. Government will allow that. Otherwise, general people should comply with invoicing provisions. Like your invoice can look any format, that's okay, but it should have basic details like date, invoice number, supplier's name, recipient's name, GST number of supplier, GST number of recipient, address, whether RCM is applicable or not, taxable amount, tax amount, total invoice amount, rate of GST, HSN code. All these things should be there on the invoice. If your previous year turnover was up to 5 CR, then for B2B supply, 4-digit HSN code. B2C, you have option. If you want to write HSN, you write. But if you are writing, write 4-digit. However, if your preceding financial year turnover was more than 5 crore, then whether it is B2B supply or it is B2C supply, 6 digits HSN code you have to mention on the invoice. Right, ma'am. For goods, triplicate copy. One with supplier, one with recipient, one with transporter. For services, because there's no transporter, duplicate copies you are going to issue. Exports can be with payment, without payment. You have to mention that on invoice as well. Right, ma'am. If my value of supply is less than 200, recipient is unregistered and recipient is not wanting invoice, I can decide to not issue invoice. But then end of the day, I will have to issue a consolidated tax invoice for taxation purposes. This option is not available to multiplex screen. Even if value is less than 200, they will separately have to issue tickets in all the cases. If I am receiving some advance, I will be issuing receipt voucher. If I have to give the advance back because no supply ever happened, I will issue something known as refund voucher. If an unregistered person is supplying something to registered person and the RCM is applicable, because supplier is unregistered, he cannot issue tax invoice, then recipient will issue something known as self invoice within 30 days of obtaining these goods or services. If you supply taxable plus exempted items together to an unregistered person, you can issue a single document known as invoice cum bill of supply. For registered person, invoice and bill of supply separately you have to issue. For only for unregistered person, single document invoice cum bill of supply you can issue. If you are making payment to your supplier for RCM supplies, you will issue a document known as payment voucher. Your goods are moving, but they are not supplied. So let us say you're sending goods to job worker, or you're sending goods for approval return basis also, you can issue a document known as delivery challan. Or let us say you became liable on this date, you applied within 30 days, RC you got on a later date, meaning effective date is earlier only but RC is later, then for this intervening period, within 1 month from receiving registration certificate, you have to issue revised tax invoices. Any registered person B2B supply you have made, you have to issue separate revised tax invoice. But when you are supplying to unregistered person, all intrastate you can consolidate. In interstate, up to 2.5 lakh invoices you can consolidate. More than 2.5 lakh invoices, you will have to issue separate revised tax invoices. If your turnover from 2017-18 till today, any year crosses 5 crore, you have to comply with e-invoicing. More than 500 crore, dynamic QR code will be applicable. However, bank, NBFC, financial institution, insurance company, goods transport, passenger transport, multiplex screen, all these people are not required to comply with e-invoicing, not required to comply with dynamic QR code. Even special economic zone units are not required to comply with e-invoicing. Government people are not required to comply with e-invoicing. But for dynamic QR code, we are saying dynamic QR code only where forex is involved. Only where forex is involved, dynamic QR code will not come, because scan, tap, pay in one go for forex is Not possible. So import export in these situations, dynamic QR code is not going to apply. Talking about e-invoicing, for B2B supply, e-invoicing applicable, B2C not applicable. Imports, e-invoicing not applicable. Export, dynamic QR code is not applicable, but e-invoicing is applicable. RCM, outward supply, e-invoice will come. Inward it will not come because that's my purchase. E-commerce operator has to comply with e-invoicing, but input service distributor is not required to comply with e-invoicing. Without invoice reference number, your e-invoice is not a valid document only. You cannot amend an e-invoice on IRP portal. In GSTR1 amendment tables you can do, but you can cancel the e-invoice within a valid time. It is okay. You cannot change the e-invoice, but you can cancel the e-invoice and generate a new one. Right, ma'am. Then talking about section 32. I am going to break all your 32 teeth. Section 32, I am going to break all your 32 teeth. If you are an unregistered person trying to collect unauthorized taxes, I will break all your 32 teeth. Meaning unregistered person is not authorized to collect taxes. 3333 section says, whatever document invoice you are issuing, please mention the amount of tax on it. Right, ma'am. Then section 34 talks about credit note, debit note. In credit note, you reduce your sale. So government is not happy. So they have kept the last date 30 November or actual date of filing annual return, whichever is earlier. But for debit note, you can issue debit note anytime for any invoice. It is okay. There is no time limit. For credit note, you have to issue and show in return within 30 November or actual date of filing annual return, whichever is earlier. If your recipient is registered and he is not reversing proportionate ITC, they will not allow you to reduce your outward payable. If there is unjust enrichment, they will not allow you to reduce your any outward payable. In that case, you can issue secondary commercial nature of credit notes, but GST credit notes, they will not allow you. Right, ma'am. What will I do of all these documents? Section 35, you will maintain accounts and records. So every registered person plus transporter plus owner operator of warehouse go down. These people might be registered, might be unregistered, still they will have to maintain accounts records. But other than these, every registered person compulsory will have to maintain accounts records. Can be manual, can be electronic, it is okay, you have to maintain. If you are maintaining electronically, you have to give passwords when needed, you have to give them in a readable format, PDF if sometime required. You need to have a backup, you need to authenticate your data and all if you are maintaining electronically. For manually, serially number all your books. If you are changing anything, then you can score out and attest and do the changes, edit. For electronic, you need to maintain a log of all the edits or deletes that you are doing in your accounts. Very simple. Whatever is my purchase, sale, production data, sales data, ITC data, supplier, recipient, advances, import, export, all the data I have to maintain as per section 35. Section 36 says I will maintain, but till what period? 36 into 2, 72. So we are saying for whichever financial year you are maintaining accounts records, what is the due date to file annual return? Generally 31st December. If question gives some extended due date, you take that. So whatever is the due date to file annual return after the end of financial year, from that due date, we say till 72 months, you have to maintain your accounts records. Or if your case is gone for some scrutiny, inquiry, inspection, something like so, then whenever the decision of that order comes, 1 year from there, whichever is later, till this period, as per section 36, you have to maintain your accounts and records. Right, ma'am. S for 7, S for supply, section 7, scope of supply. 2 zeros getting mixed become 8 composite mix supply. 9 is the charging section, levy and collection. 10 types of tantrums to pay less taxes, composition, levy. 1 balle balle, why balle balle, you have got exemption from GST. 11A is also exemption. At 12 o'clock, the time changes, time of supply goods. 13 immediately, time of supply services. 14 is the rate change section. One whole and sole section containing all the provisions for 15 value of supply. 16, as soon as you turn sweet 16, your family starts to put conditions, restrictions, eligibility and condition to take ITC. 17 pe khatra, apportionment of credit and blocked credit. 18 is the special circumstances. Small number 1, big number 9. So small person job worker, big person principal. 20, just like 0, there is D, opposite of 2 is S, who is opposite ISD. 21, recovery in case of excess distribution by ISD. 2 to 22, you are earning double double, you are a person liable for registration. 22 says liable, 23 says no, 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 not liable. 24 says what is this liable, not liable nonsense going on? Shut up and take compulsory registration under GST. Okay, I will take, but what is the procedure? Section 25, procedure to obtain registration. Oh my god, this big procedure, am I going to do it twice? No. So section 26, deemed registration. Then 27, casual taxable person, non-resident taxable person. 28, 29, 30, amendment, cancellation, revocation of cancellation. 31, tax invoice and all the other documents. 32, a unregistered person, I will break all your 32 teeth, URP, not to collect unauthorized taxes. 3333, whatever document you are issuing, please mention the amount of tax on section 30 as per section 33. 34 talks about credit note and debit note. What will I do of all these accounts records? I will maintain. Who will maintain? How will maintain? Where to maintain? At the place of business only you have to maintain the accounts records. Till what period? So period of retention to maintain accounts records we see in section 36. From 7 till 36 we have completed everything. Core chapters are all done. Time, value, ITC, charge, supply we have done. Place of supply is pending, that's IGST Act. Now there are some small procedural chapters like returns, payment of taxes, etc. that we have to do in the sequence. We'll just take a 2 minutes break. I'll drink some water and we start with returns under GST from section 37. Done, guys. Let's resume. Yes, ma'am. So then continuing, section 37 talks about GSTR1. So whatever you are supplying, all your outward supplies you have to show in GSTR1. If you're supplying B2B, show it bill-wise. B2C, you can consolidate state-wise, no problem. For intrastate, you consolidate all. For interstate, up to 1 lakh rupee invoices, you can consolidate. More than 1 lakh, you have to show separately. Even if there is no sale in the entire month, you still have to file GSTR1 and nil GSTR1. If your turnover is up to 5 crore, you have an option to file quarterly GSTR1, but in that case, monthly invoice furnishing facility you will furnish if you are supplying to registered persons and they want ITC. There is a limit in invoice furnishing facility only up to 50 lakh till invoices you can show in invoice furnishing facility. Right, ma'am. Section 38 talks about communication. See, 37 is outward, 38 is inward. So whatever my supplier files in GSTR1, it is shown in my 2A on real time basis. 2B is a static statement. So whatever is furnished till the due date will appear in this month to be, later than due date it will appear in next month to be, and I take ITC based on whatever appears in my 2B. So even if my supplier files late GSTR1, that's my problem. I don't get ITC in the same month. Yes, ma'am. 39 talks about the summary, whatever is the main return. So for normal people, GSTR 3B, you don't show anything invoice wise here. Total sale, total purchase, total RCM, everything you will show here. For TDS people, GSTR 7, TCS, GSTR 8, NRTP, ISD, everyone has their own main return and everything comes in section 39. So 37 outward, 38 inward, 39 summary, GSTR 3B. F for 40, F for first return. So whenever you take registration for the first time, effective date is earlier, RC date is later, you issue revised tax invoices, where you show your revised tax invoices in this F for 40, F for first return. Section 41, read with Rule 37A, we have already completed along with ITC chapter. Till 30 September you will wait, then till 30 November you will reverse and all. 42, 43 matching reversal provisions not applicable. 4, if you see inverted mirror image of 4, it somewhat looks like NN, right? So 44 is annual return. Due date is 31st December after the end of financial year. If your turnover is up to 2 crore, annual return is not required. Up to 5 crore, only annual return is required. More than 5 crore, annual return also you have to file GSTR 9 and plus a self-certified reconciliation statement, GSTR 9C also you have to file. So up to 2 crore, no annual return, no 9C, nothing. Till then less than equal to 5 crore, I will say only annual return, no 9C. For more than 5 crore, even annual return you have to file, and even the self-certified reconciliation statement 9C you have to file. If your books of accounts are audited by the Comptroller Auditor General of India, government people basically, they don't need to comply with section 44 annual return provisions. Right, ma'am. Annual return you file every year. 45 is the final return. Only once when your registration is cancelled, you have to file section 45 final return. So whenever you are getting your cancellation order or whatever date effectively is written in the order, whichever is later from there within 3 months, you will be filing your final return. If you don't file any return on time, you will get a notice under section 46. As per notice, they will give you 15 days time. As per notice, they will give you a 15 days time to file your pending returns here. If you file within 15 days, okay. Otherwise, after that, your case becomes open for best judgment assessment. Section 47 says if you will file late return, of course, you will have to pay late fees. And section 48, GST practitioner, 4 into 2, 8. So if you are not doing your work on your own, you're hiring GST practitioner to do, so your work will get doubled. This way, you can remember the section number 48, GST practitioner. They can do everything. They can generate challans on your behalf, file returns for GSTR 1, 3B, apply for regular to compo, compo to regular, cancellation, revocation, generate challan, make the payments, file the returns, everything these people can do. But whatever they are doing, ultimate responsibility will remain of the original registered person only. GST practitioner should be an Indian citizen, person of sound mind, not insolvent, not convicted by court, and plus having some relevant qualification or degrees as recognized by government. Then you can become a GST practitioner. We also have section 150 here, which is information return. So government can go to your registrar, to your electricity board, income tax authority, to your vehicle authority, basically any independent third person, government can go and ask information about you. These people will have to give information about you, otherwise penalties will start to apply on these people. So government is trying to verify your compliances from some independent third party. That is section 150. Information return. Then we have Rule 88C and Rule 88D. Rule 88C says government will compare your GSTR 1 and 3B. If you are showing more sale in 1 but not in 3B, they will issue you an intimation to rectify it. So either you give them some explanation why difference, or you make the payment along with applicable interest and all. Whatever you have to do within 7 working days. If no, then straight recovery will start. No demand order even. Just one intimation they will give you, and if within 7 working days you are not taking any action, they can anytime initiate your recoveries. However, in Rule 88D, they will compare your 2B and 3B. If you are taking more ITC in 3B compared to 2B, again they will give you intimation. They'll give you 7 days time to either reply, 7 working days time to either reply to them or to submit explanation to make payment with interest. Whatever it is you have to do within 7 working days. No, then they will first issue you a demand order 73, 74, 74A. After that, recovery. So for 2B, 3B, first demand, then recovery. But if the difference is in 1, 3B, that's your self-assessed tax only and you're not paying, one intimation given, now what demand order you want? So straight recovery can start in Rule 88C. Till you have received this intimation of 88C, 88D. If you have not paid the amounts with interest, you are not giving explanation, then till that period, they are going to block your GSTR 1. And you understand, if one period GSTR 1 is blocked, till you file this period 1, you cannot file 3B. Till you file this period returns, you cannot file further period returns. So blocking one GSTR 1 would mean automatically blocking all the further returns. You cannot file then anything. Right, ma'am. Then talking about section 49, which is payment of taxes. So we have 3 ledgers here: electronic liability register, then cash ledger and credit ledger. Liability register, cash ledger and credit ledger. Now whatever liabilities arise, maybe you show in return or demand order is arising, anything, it will all be debited in liability register. When I file returns, I show my purchases, I take credits, they are credited in credit ledger. I pay challans, I deposit cash, that comes in my cash ledger. Sorry. So my cash ledger and credit ledger are credited. Opposite side, I have liabilities in my liability register. I will use my cash and credit ledger to set off my liabilities. However, understand, RCM, TDS, TCS, composition payments, or any interest, penalty, late fees, basically anything other than tax, compulsorily you have to pay using cash ledger only. So what do I understand, ma'am? Only taxes I can pay using cash and credit both. Otherwise, all the other types of payments compulsorily I have to do from cash ledger only. Also, there is a manner of discharge, meaning my prior period self-assessed taxes I will have to pay first. Then my current period taxes I will pay. And after that, if there is any demand order also, I will discharge. So in my liability register, if there are multiple liabilities, first prior period taxes, then current period taxes. And after that, if there is any demand order arising also, I am going to discharge that. Right, ma'am? In my cash and credit ledger, I will keep taking cash and credit and then I will use them to set off the liabilities. Whenever you apply for refund, your cash credit ledger gets debited. If your refund is rejected, later that amount gets recredited. All these very simple things. Talking about cash ledger, you have to first generate a challan. All the challans in GST are electronic only. There is no provision of manual challan. Once generated, challan remains valid for 15 days. You can make payment against it and then you are further going to pay to the government, right, ma'am? Now, if generally you have to pay using IMPS, UPI, NEFT, RTGS, all these ways. If you want to go and pay over the counter, cash, check, DD in the bank, then maximum 10,000 per tax period per challan you can pay. More than this is not allowed over the counter. Compulsory NEFT, RTGS, IMPS, net banking, UPI, credit, debit card you will have to use. But this 10,000 limit is not applicable to government. Government departments can pay more over the counter. If they have come for raid or so, they've seized more money, of course, they will go and put it in the bank. For you and I, normal people, over the counter, more than 10,000 is not allowed, compulsory. Online payments and all you have to do. Right, ma'am. For NEFT, RTGS transactions, RBI will act as the electronic focal point branch. Otherwise, all the branches that are authorized to collect GST money on pan-India basis, they will nominate their one branch to act as electronic focal point branch, where government will open accounts in all the major minor heads. So when you put money, money respectively goes into that relevant account. Then there is a provision of GST PMT 09. which is only for cash ledger, not for credit ledger. Compulsory only for cash ledger. If I have balance in CGST, SGST, IGST, tax, interest, penalty, fees, anywhere, and I want to transfer from any major minor head to any other major minor head, I can simply file a form known as GST PMT09, and within my cash ledger, I can internally transfer money from any major minor head to any major minor head. But it is not for credit ledger, only for cash ledger. Even you can give cash to your distinct person, whatever balance you have in IGST or CGST, not SGST. You can simply from SGST first transfer using PMT09 in your IGSTC, and then you can transfer. That's okay. Directly from SGST, balance cannot go to cash ledger of your distinct person SGST. So whatever balance I have in C or SGST, any minor head, I can transfer to my distinct person. Again using PMT09, but only for cash ledger, not credit ledger. Right, ma'am. But there's just one condition. My all liabilities should be set off. After there is no liability outstanding on my part, I can transfer these amounts to my distinct persons. Right, ma'am. Then we talk about section 50, half century. Interest has started to develop. You have come to section 50, half century. Interest has started to develop. So section 50, interest simply says whether there is short payment, late payment in GST, or there is ITC wrongly availed and utilized. You have to check both. If ITC is just availed but not utilized, interest will not start. Once only when ITC is actually utilized, meaning your credit ledger balance has fallen short, then the wrong ITC that you have availed, then you will say utilization has happened. From utilization till reversal, you will pay 18% per annum interest. If there is short payment, late payment, again 18% per annum interest you have to pay. For any late payment, let's say March month return that I should file on 20 April. I have filed on 29 April. Then for 9 days, only on the net amount. Let's say my total liability was 100. 30 I used from credit. 70 I paid in cash. Even in 70, 40, let's say 45, I was having in my cash ledger from due date till date of payment all the time. Then on this also interest will not come. 70 minus 45, only on that amount, 25. Only on 25 for 9 days, 18% per annum interest will come. So only on the net new amount that you deposit after the due date of payment, only on that net new cash amount for late payments, interest is going to apply. But for short payment on full gross amount, interest will apply at the rate of 18% per annum. Talking about ITC, availment not relevant. Utilization, in the month which you are utilizing, whatever is the due date of that month return or the actual date of filing that month return, whichever is earlier, from this date in the month of utilization, interest will start and it will continue till you actually reverse. For these number of days, 18% per annum interest you have to pay. And utilization will be considered only when your total credit ledger balance is falling short of the wrongly availed ITC. Till the time I have correct ITCs available with me, I will always assume I will be using the correct ITC. Why to touch wrong ITC if I have correct ITC? So only when my balance falls short, I will say utilization is happening. Right, ma'am. Then 51 में double, 52 में आधा. 51 में double, 52 में half. So section 51 double TDS, section 52 0.5 percentage TCS. Right, ma'am. For both the things, if the supply is exempted, nil rated, non-taxable, RCM supply, TDS, TCS will not come. Only normal taxable supplies, provisions of TDS and TCS apply. And second, supplier should be a registered person. If supplier is unregistered, then also TDS, TCS provisions will not come. Talking about TDS first, if the supplier is a registered person making taxable supply, pure taxable value of supply more than 2.5 lakh rupees, and recipient are those government people, government agency, government establishment, body set up by government, at least more than 51% or 51% control is with government, government departments, or registered person giving metal scrap to another registered person. These situations, we will say, if the value of supply, taxable value of supply, is more than 2.5 lakh, then recipient will take compulsory registration and collect 2% TDS and pay it to government. 2% of taxable value, pure taxable value, no tax amount, no exempt supply, nothing. Of pure taxable value, 2% TDS has to be collected and paid to government. GSTR 7, they will file, they will show the taxes, and the supplier will then get the credit of this TDS deducted in the cash ledger, which you can claim back and use for further payments. Right, ma'am. If the supplier and place of supply are in same state, meaning the bill will be of C plus SGST, but recipient is in some another state, there will not be any TDS, because the recipient's TDS is not going to match with the bill TDS, bill whatever taxes charged. See, if supplier, recipient, place of supply all are in different state, bill will be of IGST. IGST 2% TDS you collect. Supplier and place of supply are in same state. Recipient is also in that state only. Bill will be of C plus S and the SGST will match. So again, 1 plus 1% TDS you can collect. However, bill is of C plus SGST because supplier and place of supply are in same state, but recipient is in some another state. The TDS will not be deducted because then recipient will deduct TDS of some another state, which supplier cannot later set off. Otherwise, all situations, if the taxable value of supply is more than 2.5 lakh rupees, TDS will be deducted by the supplier only for exclusive of taxable value, which is greater than 2.5 lakh rupees. Not for nil rated, exempted, non-taxable supplier, unregistered, all cases, TDS will not come. Talking about TCS, again, supplier should be a registered person. E-commerce operator should not act as agent, and the recipient is forwarding money through e-commerce operator. There is no threshold limit. Even if 10 rupees supply is made through e-commerce operator, TCS will come at the rate of 0.5% total, meaning 0.25 C plus SGST total will come here. So recipient can be registered, unregistered, doesn't matter. If supply is 9.5 supply, then you apply 9.5. If 9.5 is not applicable, e-commerce operator is not acting as agent, and the payment is flowing through the e-commerce operator, then in that case, whatever is the whatever is the taxable value of that taxable value, 0.5 percentage TCS Eco will collect, file GSTR 8, deposit it with government, and this will later be available to the supplier in electronic cash ledger. No threshold limit, just two conditions. Money should flow through e-commerce operator. If recipient is directly making payment, then TCS provisions will not come. Money should flow through e-commerce operator, and second, e-commerce operator should not act as agent. 9.5 applies, then TCS will not come. Apply 9.5. Other than 9.5, whatever is the sale minus sale return net sales for the month, for that month, 0.5% TCS will be collected. If sale return is more than sale, then zero, ignore, no TCS for that particular month. If I am the e-commerce operator and I am only the supplier, then I cannot collect my own TCS, of course. Some third person has to collect. Let us say I'm supplier, there is Eco 1, which is in turn integrated with Eco 2, and then there is a let's say recipient goes to e-commerce operator 1. I want to book a ticket, so I go to Sky Scanner, e-commerce operator 1. Sky Scanner goes to, let's say, GoIBibo, and then here it is Indigo, my actual supplier, from where I'm booking the tickets. The question is, who will collect TCS? E-commerce operator 2, the person nearest to the supplier. The e-commerce operator nearest to the supplier will be liable to collect TCS. But let us say, ma'am, e-commerce operator 2 himself becomes the supplier. Indigo is not the supplier, now Goibibo is only the supplier. E-commerce operator, but I am only my supplier. Then I cannot collect my own TCS. Then who is available next further? E-commerce operator 1, he or she will collect the TCS. So till possible, the e-commerce operator closest to the supplier will be collecting TCS. The moment supplier and e-commerce operator become one, then who is the next e-commerce operator available will collect TCS. But I am only supplier, I am only the e-commerce operator, I cannot collect my own TCS. Right, ma'am. Then section 53 to 58, all these provisions are refunds. Now in refund, there is one amendment, first of all, that you have to remember, that if my Aadhaar is not authenticated or I am supplying Areca nuts, pan masala or so, I will not be eligible for provisional refund. Normally people doing zero rated supply get provisional refund of 90% within 7 days of applying, and then later final refund order comes to them. But I will show it to you in the book that if you are, or maybe in just amendment sheet, I will show it to you. Yes, here. If your other authentication is not done, or your supplier of areca nuts, pan masala, tobacco substitutes, essential oils, then provisional refund will not be allowed to you. Other normal people get 90% provisional refund within 7 days of them applying for refund. This one thing you have to remember. And second are the two formulas. So if you are applying for refund because of zero rated supplies, then whatever is the zero rated supply of goods plus zero rated supply of services upon total adjusted turnover multiply by net ITC. This is the refund amount that you get. In net ITC, you will take input also, you will take input service also. Capital goods you will not take. Opening ITC you will not take. For the period, net input and input service ITC you will take. Total adjusted turnover will be zero rated, non-zero rated, everything you will include. Exempt supply you will not include, because for exempt supply you don't even take ITC. So there is no apportionment in this ITC for exempt supply. You don't even take exempt supply in the total turnover. Right, ma'am. Talking about zero rated supply of goods, whatever is your actual export value, or we will say 1.5 times of the domestic price of that same product. So if I'm exporting something for 300, but I'm domestically supplying it for 200, I will do 200, let's say this is 450. 450 I am exporting, and domestically I supply only for 200. So I will do 200 into 1.5, which comes as 300. So 450 or 300, whichever is lower, 300 will be taken as my zero rated supply of goods. So actual export value or 1.5 times of domestic value of the same thing, whichever is lower, you have to take as zero rated supply of goods. For services, whatever total money I received for this period for export of services, plus any advance that I received earlier, but service I have done now, minus any advance that I have received today, but service I will do in future. This is my zero rated supply of services. Total money received for the period for which I am applying for refund, plus refund received, advance received earlier, service completed now, minus advance received now, but service will be completed in future. This is the total zero rated supply of services. Plus goods you do upon total adjusted turnover multiply by net ITC, and you get refund of zero rated supplies. Talking about inverted duty tax structure, I will say net ITC. Here you will take only input. No input service, no capital goods. Only input for the period. But this ITC is for your total turnover. You have to take whatever is your inverted turnover, meaning the rate of GST on sale has to be less than rate of GST on purchase. Only those sale for which the rate of GST is less than purchase rate, that you will take here. This will be ITC attributable to inverted supply. But why will I get full refund? I have to pay tax also, no? So whatever is my inverted turnover, multiply by what tax I have to actually pay. That I will reduce. But why to assume that full I will pay from my net inputs only? So this multiply by net input upon you will do ITC on input plus input service. Basically, I am assuming that proportionately some only I will be paying from input, some I will be paying from input service. So please don't reduce my refund amount. This will reduce the amount to be subtracted, meaning your overall refund is going to increase. So inverted duty tax structure says whatever is your net ITC only of input. Here you take input service both, but inverted duty tax structure only input, multiply by inverted turnover upon total turnover, minus what actual tax you have to pay on inverted turnover. But why to pay from input only? So this multiply by input ITC upon input plus input service ITC. Capital goods you have to ignore. Whatever is your final amount as per the formula, that you will take. Compare it with the ITC balance available while applying for refund. So when I'm applying for refund, how much ITC balance I have? Or the period for which I'm applying for refund. After filing GSTI 3B for that period, what balance was available in my credit ledger? These two figures, of course, question will have to give. Compare it with the formula figure, and whichever is lowest of the three, that you will get as the final refund under GST. Simple, done? Yes, ma'am. So this is the core GST as such. From section 59, the litigation GST starts, which is assessment, audit, inspection, demand, appeal, revision, offences, penalties, advance ruling, liability to pay in certain cases. As such, I have already uploaded separate revision videos for that. But still, because we are on a flow, I will just take half an hour more and cover all these things also in the same video only, so you get a comprehensive overview. Right, ma'am. So section 59 talks about self-assessment. So everyone has to assess their own taxes in GST and pay to government. Right. Section 60 talks about provisional assessment. If I am unable to determine the value of supply or rate of tax, then I can go for provisional assessment. And later when my assessment is finalized, there are two possibilities. Either I had short paid originally, meaning my final assessment amount is more than my provisional amount, or I had excess paid originally, meaning my final amount is less than provisional. So in that case, if I had short paid, then I will have to pay the differential amount, yes ma'am, plus I will also have to pay interest at the rate of 18% per annum from original due date of payment till the date of actual payment. So from original due date of payment till the date of actual payment, for this entire period, I will pay interest at the rate of 18% per annum. However, I had excess paid initially, then you will get refund at the rate of 6% per annum. If your refund is arising because of any court tribunal order, then the rate of interest becomes 9%. Otherwise, generally it is 6%. The day on which you apply for refund, if you are getting refund within 60 days from here, then no interest you are going to get. Whatever is the period over and above 60 days, let's say you get refund within 69 days, then only for 9 days you're going to get this 6% per annum interest. Refund amount you will get, and interest till 60 days of applying, nothing you get. After 60 days, 6% interest. For court tribunal orders, 9% interest you are going to get. Section 61 talks about scrutiny. So while you have furnished your return, department may scrutinize your return. While scrutinizing, if they are finding anything, they can issue you notice, ask for replies. You will reply to them within 30 days, and your reply can be satisfactory, they will drop the proceeding. You accepted your mistake, you paid tax interest penalty, they will drop the proceeding. Your reply is not satisfactory, or you are accepting but not taking any action, then officer can take recourse of anything. Recourse of, they can do your audit under section 65, they can do your special audit, hire chartered accountant, cost accountant to do your audit under section 66, they can initiate inspection, search, seizure proceedings, or demand recovery proceedings, section 74A, can be initiated against you. So if at all in scrutiny something is found and you are not giving satisfactory replies, they can initiate audit, special audit, inspection, or demand recovery proceedings. Then section 62 talks about best judgment assessment. 63 also talks about best judgment assessment, but 62 is for registered person not filing return. And 63 talks about unregistered person. Maybe your registration is cancelled, or let us say like the officer cancelled suo moto, or you are liable but you have not taken registration, you will fall in section 63. Here they will first give you a notice under section 46 to file returns. They will give you 15 days time. After that, if you are not filing, your case becomes open for best judgment assessment. Here, even if they give you time, you cannot file return because you are not registered, right? So they will just give you a show cause notice, opportunity of being heard, you reply within 15 days. Otherwise, they will issue you order. Now, both the cases, whatever financial year they are giving you order, due date to file annual return for that financial year, within 5 years from here, they can issue you a best judgment assessment order. After 5 years, the case will become time bar, time lapse, and they cannot issue you a best judgment assessment order. So both situations, for whatever financial year, due date to file annual return, within 5 years from there, they can issue you a best judgment assessment. Here within 60 days, if I come forward, voluntarily file return, even this order can be withdrawn. I have that option here. But here, no withdrawal is possible, because even if they give you time, you cannot file returns. You are unregistered. And section 64 talks about summary assessment. The person has incurred liabilities, but you have sufficient grounds to believe that if you follow the normal procedure, it will take time, the person will run away, interest of revenue will be affected. In that case, you can do summary assessment. Now, because this is done in a hurry, there are chances of errors. So either the taxable person itself or the officer, realizing on their own, even withdraw the summary assessment and decide to continue as per the normal demand recovery proceedings. This is one special kind of assessment, because this can be done on taxable person. If taxable person is not ascertainable, even whoever is available, person in charge, let's say they're catching the truck, The driver is not saying who is the owner, or in a warehouse they're finding goods, the warehouse owner is not telling who is the owner, then whoever is the person in charge available there, of that person only, summary assessment can be done. This is one special kind of assessment that way. Right, ma'am. Then section 65 talks about departmental audit, where officer will do your audit, and section 66 is special audit done by chartered accountant, cost accountant. The cost, of course, will be borne by government only. Here the audit has to be finished within 3 months plus extension of 6 months. Here it has to be finished within 90 days plus 90 days, and of course 90 days are not same as 3 months. Right, ma'am. When will the audit commence? When you are actually giving all your books, or the officer is coming and starting audit, whichever is later. From that date, I will say audit has started, and within 3 months plus 6 months, it has to complete. Audit is very amicable process, friendly process. They will inform you prior to coming, and then only they will start your audit. Even if your books of accounts are already audited, they can audit again with whatever specific purpose they have in their mind. Right, ma'am. Then section 67 talks about inspection, search and seizure. Inspection is comparatively a softer provision, right? So if you are a taxable person and you have done cess, contravene act, evade taxes, suppress stock and suppress your turnover. So if you are suppressing supply, suppressing turnover, you are taking excess ITC, you are suppressing stock, or you are suppressing supply turnover, or you are contravening act to evade taxes. In these cases, at least joint commissioner or above officer can give a written authorization to proper officer, and proper officer can come for inspection. Or if you are transporter, owner operator of warehouse, go down, you are dealing in goods on which taxes are evaded, you are maintaining accounts in such a way that it suggests taxes will be evaded, then even your inspection can be carried out. But only in these said situations of normal taxable person and transporter, owner operator of warehouse, go down. If you are dealing in goods on which taxes are evaded, or you are maintaining accounts records in such a way that it shows taxes might be evaded, then in these cases we are saying inspection can be done. Without written authorization, inspection is not possible. Search and seizure are raid provisions. Basically, they will come with search warrant. A search warrant should have VPN square, meaning what is the validity of the search warrant, what is the violation done in the act based on which search warrant is issued, on which premises are to be searched based on the search warrant, what is the place and date of issue of search warrant, serial number of search warrant, and name designation of officer who has issued the search warrant, and name designation of officer who will come and actually carry out the search operations. So a valid search warrant should have these 6 details on it: VPN square, validity, violation, premises, place and date, serial number of search warrant, and name and designation of issuing officer and the authorized officer who is going to come and carry out the search operations. What happened? Just a second. Right, ma'am. So based on this search warrant, officer will come, show ID card, break almirah, open doors if you're not allowing them. They can confiscate your goods. Not possible. They can detain your goods. Lady officer has to accompany them. All these things. The basic search and seizure operations. Right, ma'am. Then section 68 is the e-way bill section, which is inspection during movement. If the consignment value of your goods is more than 50,000, then e-way bill is mandatory. But for job work or handicraft goods even less than this interstate movement, e-way bill is mandatory. So in this case, if your consignment value is more, you have not generated, e-way bill officer can stop you, do inspection during movement, and here even authorization is not required. Normal inspection, authorization is required. For inspection during movement, without authorization also, officer can stop and do inspection. 69, your favorite number, handcuff 69, right? So we say arrest section. Now at least 2 people you need, right? Meaning more than 2 crore. Your offense has to be at least more than 2 crore. Only then arrest provisions can be initiated. In GST, normally all the offenses are non-cognizable and bailable only. But if the amount is more than 5 crore, in some specific cases, when fake invoices are involved in all these cases, excess ITC and all that cases, we say even some cases the offense can be cognizable and non-bailable also. But generally all offenses are non-cognizable and bailable only. They have to produce you before magistrate within 24 hours and all. So that are all general provisions. Section 69, arrest. Arrest means to take custody of someone, a legal custody. Right, ma'am. Then we talk about section 70. 70 TT. Arey, what is happening to the screen? Hello. Yes. So section 70 TT. Why 70? Because department wants to call you for a T. Meaning, ma'am, section 70 summon provisions. So section 70 says, if at all officer feels they want to call you, ask you something, bring documents, examine you, under section 70 TT. Why T? Because they want to drink tea with you. They are calling you, they are summoning you. You have to respect the time of summon, be available there. Not possible, send your authorized representative if allowed or so. Department also has to be very specific what they want. They cannot tell you bring entire books of accounts. Specifically, they have to tell you what they want from you. You will go there, summon, right? If they want to summon any big person of some PSU or so, they should have reasons to believe that that person has involvement, because otherwise general, let's say you get to know in market today Mukesh Ambani is summoned by GST department, stock market will crash, there will be a lot of other problems. So big people department is not saying you don't summon, but there should be some evidences of that person being involved, right? Then section 71 says I am actor list, access to business premises. See, inspection officer can come at your premise only if you have done that says thing, contravention, excess, ITC, suppressed stock, suppressed turnover. But generally, while any inspection, they want to come ask for any documents, income tax reports, audited statements, cost audit reports, trial balances, any other accounts records that you're maintaining. So they can come ask these I am actor things, income tax, audited financial statements, cost audit, trial balance, other reports, or any other records that you are maintaining, furnishing on the portal. They can come ask and you will have to provide these documents as per section 71. 72, Bahattar Singh, officer. So if GST officer is going for inspection, search, seizure operations, they can take the village officers, land revenue officers, local officers, police officers with them, who will assist them, go with them for all these GST operations. Right, ma'am. Section 73, 74 are now no more relevant. 74A, demand provisions. So if you have done tax not paid, short paid, ITC wrongly availed, utilized, or refund erroneously taken. Tax not paid, short paid, ITC wrongly availed, utilized, or refund erroneously taken. In that case, demand provisions will be initiated against you. Before show cause notice, they can give you a normal intimation communication. Show cause notice they will give you within 42 months from the due date of annual return for that financial year. So whichever financial year the taxes are not paid, short paid, ITC wrongly availed, or whatever is the erroneous refund date, from there within 42 months they will issue you a show cause notice. 42 months from due date to file annual return. For erroneous refund, 42 months from erroneous refund date only, they will give you a show cause notice. Right, ma'am. Now your case can be other than fraud or fraud. If you have done fraud, then even if before show cause notice, if you voluntarily come forward, you will have to pay all the tax interest plus 15% of tax as penalty. Within 60 days of show cause notice, tax interest you will pay and 25% of tax you will pay as penalty. Within 60 days of order, 50% of tax you will pay as penalty, and after that 100% of tax you will have to pay as penalty if it is a case of fraud. So before show cause notice, 15% of tax. After show cause notice, within 60 days, 25%. Within 60 days of order, 50%. And after that, any time if you are paying your demand provisions, you have to pay tax plus interest and plus 100% of tax in the form of penalty. However, it is not fraud, not fraud, willful misstatement or suppression, then before show cause notice only tax interest pay, no penalty. Within 60 days of show cause notice also only tax interest pay, no penalty. After 60 days you have to pay 10% of tax or 10,000, whichever is higher, once the order is issued. This is under CGST Act. So under IGST Act, it will be 20,000. Never double percentage in IGST Act. 10% will remain 10% only in IGST. Why? Because the tax figure will get doubled for IGST. So automatically amount will get doubled. So percentage of tax you will not double, but absolute figure of 10,000 will become 20,000 under IGST. Right, ma'am? This order has to be issued within 12 months. Whenever they are issuing you show cause notice, from there within 12 months plus extension of 6 months, they are going to issue you a final assessment order. See, for self-assessed tax or any amount that you have collected in the name of tax but not deposited to government, you don't get any penalty waiver. Even if you pay before show cause notice, within 60 days of show cause notice, still this penalty you will have to pay. Or self-assessed tax or any amount collected as tax but not paid within 30 days of due date. Other cases, your penalty here can be reduced depending upon when you are paying. So this is slightly relevant. 42 months they will issue you order. They will issue you notice. From notice within 12 months plus 6 months they will give you the final order also. For fraud case, 15, 25, 50, 100% of tax as penalties you have to pay. Not for fraud case, it is going to be no penalty before show cause notice or within 60 days of show cause notice. After that, 10% of tax or 10,000 under CGST. So 10,000 becomes 20,000 under IGST, but percentage remains same because tax becomes double in IGST. Right, ma'am. Then we have some general provisions of section 75 which says that your demand order amount cannot be more than show cause notice. So maximum amount of order can be less than or equal to show cause notice. Even if interest amount is not mentioned in order, still you have to pay. You know how to calculate interest. So even if interest is not mentioned in final order, you have to pay it. Adjournments maximum 3 are possible. Principles of natural justice should be followed and all. If at all they issue you a notice for fraud case, now, tax is not paid, short paid, that is established, but fraud is not established. They can convert your notice into not fraud case and redetermine your penalties and all. Section 76 says if you are collecting any amount in the name of tax, but not depositing it to government, there is no last date to issue show cause notice. In life, any time show cause notice can come, and within 1 year from this show cause notice, final order will be given to you. But for self-assessed tax, we already saw in returns chapter, just one intimation they give. No show cause notice, no order, nothing. For self-assessed tax, so straight recovery will start after they give you one intimation. Right, ma'am. 7, which 7? I got confused. Wrong place of supply. So instead of C plus SGST, I mistakenly paid I, or instead of I mistakenly paid S, C plus S. First, you pay the correct tax and then you can ask for the refund of wrong tax paid. No interest you will have to, of course, pay in this particular situation. Section 78 says if from your demand order within 3 months, or department allows you less time than that, less time, but generally 3 months from order, if you are not paying your applicable penalties, interest, taxes also, then department can start your recovery. Section 79 talks about what are the modes of recovery. It is awesome tales. Awesome tales are your modes of recovery. If department is owing you any money, they can deduct from it. They can sell your movable, immovable properties. Just like magistrate recovers money, they can recover money. From third party, garniship proceedings, they can recover money. Then if there is any surety, any person who has taken your surety, they can recover money from there. Just like money is execution of a decree of court or land revenue arrears, all these things. Just like recoveries are done there, GST recoveries they can do from you. 102 installment section 80 says, see, if it is not self-assessed tax, for self-assessed tax you don't get this option. Not self-assessed tax, not less than 25,000. So at least 25,000 or more. Not self-assessed tax. You can go request officer to allow you to pay in installments, give you some extra time. Along with 18% per annum interest, maximum 24 EMIs they can allow you. Even if one EMI you are defaulting, entire amount immediately becomes recoverable there and then only. Then we have section 81, transfer of property void. Because you knew your recoveries may start or so, you sold your property for inadequate consideration to someone to save from recovery. They will consider the transfer to be void and they can still do recoveries from that property. However, the person purchasing the property was unaware about the proceedings going on, has paid you adequate consideration, or you took permission initially from officer. In those cases, we are saying, okay, transfer will not be considered as void. For 1 year, they can even provisionally attach your properties. They can stop you from using your bank account, your car or so, because these are about demand recovery proceedings. Then talking about advance ruling. You can go and ask questions of C trials from Advanced Ruling Authority or Appellate Authority of Advanced Ruling. Classification, time and value. Place of supply question you cannot ask because authorities are formed in respective state act. Their ruling is applicable in that state only. So place of supply matter I cannot ask. Already asked matter I cannot ask. Someone else can ask in similar circumstances. I will not ask my already asked question. So classification, time and value, then whether I have to take registration or not, if there is any notification, is it applicable on me or not, admissibility of ITC, liability to pay, and whatever I'm doing, is it supply or not. So classification, time and value, registration, applicability of notification, availability of ITC, liability to pay, and whatever I'm doing, is it supply or not. These questions I can go and ask to authority of advanced ruling, and within 90 days they will give me the ruling. If they have difference in opinion, they will refer to appellate authority. I am agreed, my officer is agreed, we can go and appeal to appellate authority. To go to authority of advanced ruling, the fees is 5,000 under CGST, same under SGST also. For appellate authority of advanced ruling, it is 10,000 under CGST plus 10,000 under SGST. Everything is done in a transparent manner, expeditious manner. Within 90 days, they will give you ruling. If appellate authority of advanced ruling can also not come to a common conclusion, then deemed no advanced ruling for this question can be given. Other than these questions, you will not be asking any other thing. If you have done fraud, willful misstatement, suppression, then your ruling will be declared as void ab initio. The ruling is applicable only on you and your officer, that too in that state only. Outside that state, not applicable. Other person cannot even use benefit of your advanced ruling. Other person will have to separately apply for advanced ruling even if the matter is same. Talking about liability to pay in certain cases, if there is a transfer of business, then up to the date of transfer, transferor and transferee both will be liable. After transfer, only transferee will be liable. If there is any amalgamation, demerger happening, the actual date on which order is given, till this date both the companies will be treated as separately for GST. The day effective date of merger can be anything, least concerned. When are you actually getting the order? Till this date you treat both companies as separately, purchase sale separately. After this order date, they will be considered as amalgamated, merged, demerged, whatever it is. Then principals, agents, all jointly severally liable. Minors, trustees, all jointly severally liable. People, all the members of HUF, all jointly severally liable. In case of private companies, even directors can be personally liable, but if they can prove they were not negligent, or they were not negligent, they have done nothing, that's a separate thing. Otherwise, even directors of private company will be personally liable. If a company goes into liquidation, within 30 days of appointment, the liquidator will inform that I am appointed, and within 3 months the department will inform the liquidator that these amounts are recoverable. If you are a partner, all partners in partnership firm are jointly severally liable. But if you are retiring partner, the day on which you retire, within 1 month from there, you have to inform to officer that you have now retired from partnership firm. So your liability will cease from this date. However, if you inform after 1 month, then whenever you actually inform, till that date, your liabilities are going to continue. Right, ma'am. This is all about liability to pay. Then we have appeals and revision, where section number is not that important, but the hierarchy is. If you are aggrieved by the order of adjudicating authority, you will go to appellate authority. We also have revisional authority here. From this we go to appellate tribunal. We have principal bench, we have state bench. From principal bench you go to Supreme Court, from state bench you go to High Court, and then you go to Supreme Court. Particularly, place of supply matter and anti-profiteering matters are heard by the principal bench only. Whether you go to appellate authority or you go to appellate tribunal, you have to pay a pre-deposit. Whatever amount you are admitting, by amount I mean tax, interest, penalty, whatever you admit, full 100% you have to pay. But whatever you are disputing, only 10% of tax in dispute, or maximum 20 crore under CGST, which means 40 under IGST. But 10% will remain 10% because tax will get doubled in IGST. You don't have to double the percentage. This you have to pay in the form of pre-deposit. Only then your appeal will be accepted at both the stages. When you go to appellate authority, then also you have to pay. When you go to appellate tribunal, then also you have to pay. If department is going for appeal, they will not they will not pay pre-deposit, but you and I will have to pay. Now there is an amendment here which says that my order is not involving tax order. It is only penalty order. See, if my order has tax in it, then I will only take 10% of tax and dispute. If my order has tax in it, then for disputed, only 10% of tax I will take. Other things only admitted. However, my order is only penalty order. My order is only penalty order. There is no tax involved only penalty order which I am disputing. Then you will pay 10% of penalty as pre-deposit. If your order involves tax, you have to take only 10% of tax and dispute. But your order is not involving tax, then 10% of penalty you are going to take as pre-deposit. For cases where the amounts are only up to 50,000, appellate tribunal can even refuse to accept the case. Appellate authority becomes the last authority. For amounts less than equal to 50 lakh, only a single member bench in appellate tribunal can hear your case. If there is no matter of law, it is only matter of fact. No matter of law, you have taken approval from president, amount is only up to 50 lakh, then even a single member bench can hear your case. Otherwise, one judicial, one technical, at least two members hear your case in an appellate tribunal. For place of supply and anti-profiteering matter, compulsory, you will be going to the principal bench only. Right, ma'am. We also have revisional authority. See, normally if I am aggrieved from adjudicating authority, within 3 months I go to appellate authority. Department has 6 months time to go and do this appeal. However, we are saying if department and plus extension of 1 month. When you go to appellate tribunal, it is again 3 months and 6 months only. No, 3 months and 3 months only. But then the extension becomes 3 months here. Right. Here the extension is 1 month. Here the extension is 3 months. Right. So if I'm, see, department, if aggrieved from the order of adjudicating authority, will go to appellate authority generally within 6 months. However, if they are not going within 6 months, later they have an option of revisional authority. So from the original order, till 6 months, option is appeal only with appellate authority. After this, for 2 years, 6 months, meaning total 3 years time, they have this order option of revisional authority. Revisional authority can hear the case again, stop the current proceedings and give a new order. However, if the case is gone for appeal, revision cannot happen. Revision is not bigger than appeal. But if in a single order there are two matters, one matter gone for appeal, one matter not gone for appeal, then for the second matter, the revision can be done. If you have already taken a case for revision at earlier stage, you cannot revise it again. Revisional order cannot be revised again. If appeal is done, then also revision cannot happen. Connected matter appeal is done, then not connected matter can be taken for revision. Time limit, that same only. From original order, maximum 3 years. Or if the connected matter has gone for appeal, you wait till 1 year of order of this appeal, whichever is later till this period, revision of the other matter which is not gone for appeal, revision of that can be done. Or already revised order cannot be revised again. Against appellate authority or revisional authority, both, you go to appellate tribunal only. Right, ma'am. Then there are some cases in section 120 where government is stopping their own department officers to file appeal. So government is saying their own department officers only to not file appeal if the matters are very small, like it is 20 lakh, 1 crore and 2 crore. So if you are going to Supreme Court, High Court or appellate tribunal and the amounts, total amounts, these are the total tax amount. Okay, if the order contains tax, interest, penalty, everything, you take only tax. But the order is not having tax, it is only interest penalty order, then only interest penalty amounts you take. If amounts are up to this only, department is telling their own officers only to not file any appeal. It's okay, small matters, 20 lakh, 1 crore, 2 crore. However, if the case is of refund, Ijjat meaning the strictures are passed against officers. How can you stop them to go and file appeal? Because it is on the department now. So if it is that case, or we say valuation, classification, if this is the case, if the matter is of RIPVC, if the matter is of RIPVC, interpretation issues, if it is interpretation issue, valuation, classification, strictures are against the officers, refund cases. In this case, you will not stop department to go and file an appeal. If they have to protect the interest of revenue, they are doing it to for public interest. Something is held ultra vires. The Constitution of India is held ultra vires. These cases, the monetary limits will not apply. Other general cases for small amounts, please don't go and file appeal as per section 120. Department is not stopping us. You can go and file. Department is stopping their own proper officer. Department is stopping us in section 121. They are saying order sanctioning prosecution. Section 80, they are not allowing you installments. There is a transfer of officer, or they are seizing your books. Please don't file appeal. See, whenever they seize your books, if they have issued show cause notice, their work is done, they're anyways required to return you the books back. So no point in you going and appealing for getting your books of accounts or other things back. So for these four things, you go fall in pits. For these four things, you go fall in pits, but you are not going to file appeal. This is for us. Four things: prosecution, installment, transfer of officer, and seizure of books. But section 120, 20 lakh, 1 crore, 2 crore is for department. But these things, the monetary limit will not apply. Or if you are a repeat offender, even then, monetary limits are not going to apply. Done. This is all the CGST Act in just 3 hours that I wanted to cover. You are listening to this audio first time, second time, you will be comfortable increasing the speed. Imagine today is your GST examination and you just need 1.5 hours or maybe 2 hours if you're listening it on 1.5 or so speed. 1.5 or 2x if you are listening, just 2 hours you need. Start this video audio, sit and just keep listening to everything. My target was to cover place of supply also, but I've anyways already uploaded a separate revision video for place of supply. I'll upload a separate just 10 minutes clip of IGST Act if needed. So full CGST Act as such, just other than offenses penalties chapter I've covered here. Offenses penalties is already separately available on YouTube. Rest everything majorly with all amendments 3 hours and we have covered the entire GST. I want you all to listen to this video at least 2-3 times prior to your examination. You will be extremely confident. Trust me, when you read the questions, my voice will be playing in your head. That is all that I want. All the best for your examination, guys. Do really good. I know you are going to do it, but still we have very less time left now. Utilize every single minute. I will be waiting for your call when on the result day you call me and you say, hello ma'am, I've become a chartered accountant. Hello ma'am, I've become a cost accountant. I am waiting for that day. All my wishes are with you. It is now or never. It is literally now or never. Whatever you have done till now, it's okay. These last few days, utilize to the fullest. Anything you need, you can reach out to me on Telegram. The link is there in the description of the video. Any other help you need, any doubt solving query, whatever it is, reach out to me. I am there available for you all. If this video was useful for you all, do hit like button, drop a good comment so that later students can come read it. Even I will feel very happy seeing your comments that yes, the efforts were worth it. So guys, all the very best. Do really nice. Do not forget to like, share and subscribe. See you all in some another videos. Till then, take care.